And that is what I trade from. I'm going to offer analysis on the futures market. That's what I do. More specifically, the last couple of years, I've probably 85, 90% of my time has been helping prop traders, because that is an area where that is exploding. And my career has been everything from options to prop trading. So when you ask for, I'll analyze any of the commodity charts that you'd like me to, and the futures charts, and I use NinjaTrader. So if you know those letters, otherwise I'll figure them out myself. And just let me know whether you are in the chat when you request a contract. If you do, just let me know if you're a prop trader, a day trader, and I'll, there's different ways of trading different kinds of things that you're doing. A prop trader trades differently than somebody who is an investor type person. So let me look at the chat and see if there's anybody that has given a request. I'll give you a couple of seconds here, and then I'll force something on you. I see NT signals now. Okay. Yes, well, most popular contract probably in my world. Are you a day trader, Jake, or are you a day trader? Maybe if I looked at what you printed. All right. The first thing I do, even as a day trader, is to look at, I'm going to reduce this here, is to look at the daily chart. I consider it an undertow of, I look at it as an undertow for the shorter term charts. So this is the daily chart for the ES contract and the MES. This is actually the MES. I'm sorry, it's not. This is the Dow Jones. Let's look at the, I was just doing a bit of a training. This is the MES chart here. It looks a little bit better, right? This is the 5-minute. Let's go to the daily. And what you're looking at here is the daily. And you can see that we're either doing one of two things. This is either extensive topping action, or it is we're ready for the next explosion. You can guess, but I will point out one thing. This is an old chart. Let me just look here. Yeah, this is an old chart technique that we used to do and it still works today. You can do this on any. You can do this on any chart, whether it's a 2-minute candle or a daily or a weekly. When you see an accumulation like this, we used to do this on paper charts that we used to get in the mail every Saturday, and I still do it here. I can't quite do it on my screen. It's really what we used to do is take a compass that had a pin and a pencil. I think you know what I'm talking about. Half of us are engineers. We'll put the pin here at the beginning of this accumulation, whether it be here or whether you consider the accumulation here, which I do. You put the pin here and the pencil at the beginning of the accumulation. You leave the pin where it is and you just roll up. And that gives you an idea of where a breakout or a breakdown could go. So you're creating an arc. And when that arc comes to the point on the chart that you're in the present, you get an idea of where, and it's do this on your own after you leave me. Look on any chart. It's crazy accurate. Here's a small here. This would be, put your pin here, pencil here, and you see the extent here. So, but the longer, the more accurate it seems to be. So this can help you to put in your limit orders and scale out of trades when it does break out. So what are we looking at here? And why I look at the daily chart is because I like to know that I like to know what the undertow is, because your longer term charts are going to always influence your shorter term charts. I don't use it for choosing a direction when I'm trading my 5-minute or 2-minute daily chart as a day trader. I don't only take short trades if this is a short, or only take long trades, although some do, and I think that would put your odds in the favor. I'm not seeing much here, but I see the short side here, and I'm going to give you a little bit of reason why. But what I like to do is it affects my position sizing, which is, I think, the most underestimated field of education in trading. How many eggs do you put in the basket in any trade? When I trade the ES contract, and I'm going to assume that you trade the micros as a day trader, if you're a prop trader, because these contracts now are fairly rich in the full contract or in the mini contract. I may take anywhere from 2 to 6 micro contracts in a $50,000 or $100,000 prop trading account. And whether I take 2 or 6 in when I put on my position, I always put on all of my contracts up front, just the way that I trade. I do coach those that like to scale in. But I like to, if you have a good trigger, you can go ahead and put on all your contracts right away. So if I have a very strong trigger in the daily chart, I will, that'll bring me up to the 4, 5, 6 range. And if the undertow is with me, if I see a definite, and really there's not much of an undertow here, I will stick to what I see on the daily chart. But unless I have the undertow, you'll never see me put on a 5 or 6 contract max. Again, I trade from 2 to 6 contracts, but you won't see 5 or 6 unless I'm going with the undertow. I look at the undertow on the 60. I look at the undertow on the daily. So I'm always looking at, look, this doesn't have much of an undertow, but I will say that it is starting to look a bit toppy. I think most would agree with me. So let's see what the 5 minute, what chart, Jake, what do you trade? What time frame chart do you trade? And I'll take a look at that specifically for you if you're still with us. I'm going to do the 5 just because that's a place I like to be. I'm not hearing from Jake on this, so I'm going to assume he's probably got the 5 or the 2. Well, this is not going to be much of a session because you're not going to be trading while I'm talking, likely. But I will say that I like to use the 8-bar exponential moving average when I observe. And you look at how simple this chart is. I think hopefully you're impressed with the simplicity, not so much impressed with me, but the simplicity of the chart. I find that the fewer really good indicators that you can trade, the less likely you are to miss a trade and start chasing trades and so on. I think if you know me at all, you know that my firm has primarily been from 2000 to about 2018 or 19, we were strictly helping traders with the mental and emotional part. But the fact that earlier in my career, I've written several books on creating trading plans. I got back into it because of really the opportunities that I saw in those years in the early 20s and so on, and especially right now. So, but I have not lost my appreciation for the mental part, and that's why I mention it here. So when you do things, there's 2 ways of helping yourself in the mental part. You can take certain subconscious trainings that we offer, and so on and so forth, and change the way you perceive things from the inside, from your subconscious mind. And that's most of the way that some firms do it. I don't know anybody that actually does it anymore. We are the only firm that really does what I'm talking about in depth. But I will say that the other way of doing it is to adjust your trading plan to who you are in the way that you trade and what you're willing to do and unwilling to do. And I'm going to comment on that maybe here a little bit. Of course, based on what I saw on the daily chart, let's take a look at the 60 and see what that undertow looks like. This is more of a downward undertow, right? So let's favor the short side here in our thinking. Actually, we're getting very close to one of our loaded gun signals right here. This is the 34. It's a Fibonacci And you can see how well it rides that. As in any moving average, you're going to get flips. You're going to get this until it passes another support or resistance. But you can see how well it rides even the 8 when you have a steady go at it. This looks like it wants to break down, right? If we were trading right now, we would be looking for, I look for a close below the 8. I believe this may have been a close below the 8, so I may have been short here. I'm not going to bother zooming in. I just don't have much time to give you what I got here. But generally, I look for, this is actually a loaded gun type of a trigger where you have hesitation in direction. Obviously, hesitation dealing with this previous high, this spike high here. There's some reasonable investment for probably large houses that are looking to be sellers in this area. And so we're looking for a trigger. Well, this is one of our triggers. It looks like a gun, doesn't it? It's our loaded gun trading plan. You can see that this would be the trigger area. This is the barrel of the gun. We're pointing downward here. I wouldn't take on much here in my 2 to 6 range. I may just take on 2 or 3 contracts. I would put my stop above. If I took 2, I would put my stop above here. If I took 3 contracts, I would put my stop above here. I'm not willing to do much. Now you can see this trade is starting to work out. And where do I take my profit? I always take half of what I put on based on what I'm looking at here in this, what I call extension candle. When you have an extension candle through the 8, like this here, here's a nice loaded gun signal to the short side. You can see where that ended up. Here's another loaded gun signal that didn't work out. So, but here I'd be looking at measuring the body of this and extending the length of that body. That's where I would take my first scalp. It really depends on the whole body or 70% of this body, depending on the volatility. The higher the volatility, and this may sound counterintuitive, and one of these days I'll explain why, I would only take 70% of this. So I measure 70%. From the close, I get in at the open of the next candle, and I am buying one of my 2 right here. I don't know if I would have gotten it here, but I measure exactly 70% of the body, extend it down. So we would be in this trade. Anyway, I'm just kind of giving you an idea of how to defend, how to protect. And here's, actually, this is another one of our signals going long. You can see now, when you go, let me just say that in any system that you build for yourself, or any system that you take for somebody else, and it may not be working, so you start to do your own thing and Frankenstein your system. There's a much higher probability of being successful in a short trade if whatever shorter term moving average is below whatever longer term moving average. So when the market is below when you have in this case, the 8 below the 34, the 50, or the 20, whatever you're using, we use different. I just happen to have this one on the chart. I will only take short trades. So even though this is one of our signals, I would not take the trade because I don't like to take trades into the longer term moving average. So there are those that run our loaded gun simple trading plan and do take them. Here's one that looks very similar, but glad I didn't take it. Here's one here's another one that, and you can see why. We've got a double bottom here. This is a stronger approach. Maybe and if I take on, there's also something about if you're mental type meaning if your patience are, listen, I like to be in trades. I have no problem with taking one contract in a trade and making it a scalp. I always, if I'm going to take one contract, it means that it's only an A setup and not an A plus setup. And this is an A setup to me. You've got a double bottom, you've got an engulfing pattern, you've got a wick, you've got a lot of reasons from trading 101 to be long here. I just don't like going into the longer term moving average. And so if I took this, I would take one contract and I would take my profit before I decided to breach the 8 or the 34 or the 50, whatever you're using in this case. So that's the way I look at it. Listen, successful trading is all about lining up your edges. And if you're somebody who, like me, likes to be in a trade, if you don't want to force a trade, but one micro with this environment is still an A trade, but I've learned to only take A plus trades. Here's an A plus trade. Very similar, right? I mean, similar from the standpoint that it's an engulfing pattern and it's got a wick, right? That was opposite where you want to go, kind of at your back. The shorter term moving average and the longer term average. This is close. Well, this is not a maximum take for me. Remember, I said 2 to 6 contracts I would take because I'm dealing with this right here. Okay. So in this particular case, I may take 3 contracts. I mean, it's a beautiful trade and I love it. And there's a lot of good things, but going against the double bottom sucks. So again, you're dealing, but look at everything else is lining up. I love big candles. The bigger the candle, the more investment there are in that particular situation. So I really like that. And look, you measure the candle, 70% of that. I'm taking my scalp right here, and it did advice me. It made you sweat if you're somebody who likes to sweat. But so what I'm describing to you really is professional traders, and I've coached professional traders for over almost 40 years, since 1981. Is that 40 years? I guess it's 45 years. 45 years. And I will say that no two traders are the same. A lot of them are very similar. But the key is to identify who you are mentally and emotionally and discover that DNA and then adjust a capable trading plan to you to work for you on the basis of position sizing, on the basis of when to take a trade and when not to, et cetera, et cetera. My accountant, for instance, he has got the patience of a saint. He can wait and wait and wait. And that's okay. I would handle this chart in a different way. I would be looking more at what's happening in the crossing of the averages and so on for other indicators. So it depends who you are. And if we ever get to meet, we have a new program called CPR, where we actually come to your house and put the paddles on your chest. And David has come with me, the guy running this. He usually yells clear for me, clear. And I will then do the paddles. We do that, not exactly like that, but we do that for traders who are getting off the mat one more time and don't want to get back on the mat again, especially if you're a prop trader and you're on evaluation number 150, somebody I coach today. It just means that you really want to do it, and you really think somebody's at 150 really want to do it, really think they're doing it, and so I want to. You need to. I want to. You're determined, and I want to deal with determined people, and I want to help you do it right. And what I do is help match the trading plan, whether you're using your own or you're using Loaded Gun or you're using any of the trading plans that I know out there. I've built many of them that people use. I will help you fit yourself to the trading plan. And in CPR, we also give you the mental training. You work with my wife one-on-one, and you make it's an elite program, but it's somebody who is tired of just paying prop fees, or if you're a trader that's a retail trader, make that happen. Anyway, there is no direction yet, except for I think I would be watching for lower prices in this. There's a lot out there that I'm surprised we haven't seen more action, especially on the downside. Yesterday, we actually reversed. We're seeing what was more expected today on the downside, but you can see right here that this is not going to work or may not work. But this is a place where we would have taken a short. I do want a short loss, and I want to tell you that the other part of trading, since I only have a very short period of time, I just want to get out the bulk of why people lose in prop trading, in futures trading, in stock trading, and why they cream their losses. Sorry, Mr. Gebhard. I am, when you put in a stop, and if I generally in a $50,000 prop trading account, I won't take a loss of greater than $250. So I would be if that was here in my stop. What happens here? This is a definite signal that well, not definite. This is all of a sudden we're taking away the edge of the trigger. I don't want to be in this trade now. But a rookie trader would say to themselves, hey, I have the 250 stop in. Let me, I still got some room, still could come back. They're rooting for a trade that's really falling apart. If you have a valid trigger like this, where you like this one and this one, we've got several of them, and they don't take. So here's 3 examples. 2 of them had immediate moves, right? This one didn't have an immediate move, right? So when that happens, when you don't get an immediate move on what I call a frequent and reliable trigger, one that gives you a pop, you're in trouble. Why wait for the 250? Because of ego. Okay, right here you have a $50 loss, a $70 loss. Take it. Move on to where all of the edges are lined up. This falling in love with where you originally put in your stop. I understand that. I was there, and I have slapped brokers almost in the face when I used to run a room of 63 professional commodity trading advisors. And I'd have him in my office, and I had my hand with the back of the hand almost. You can't marry your stop. You can't marry your stop. You're always looking for a way to take less and less of a loss in a trade that's not working out. And it's okay that a trade is not working out. So that's the point I want to make here. If this doesn't work out, I'd be out here. And you can see that we may or may not be stopped out here, but it really doesn't matter because I'm on to the next trade. And here's another thing that I would want to lend to you, that by doing that, by getting out of a trade that's not working out early, if you have a trigger that has been tested to give you a pop upon application, what you're not only wasting money by not getting out early and taking a limited risk rather than the whole risk, but you're wasting something that could be more important, and that's time. While I'm praying for this thing to happen, let's say I put my stop on, I'm praying for it to happen. Maybe it'll make a double top. I'm talking to myself. I'm saying maybe it'll make, no, you have enough reason right here and a frequent reliable trigger that it's not happening. Get the hell out. Okay, because now you're wasting time. Not only will this likely be stopped out on both stops, it wouldn't matter whether you had 2 or 3 positions, but you're not going to, you're wasting time, because when you look at another market, and again, I'm looking at several markets. I generally look at the S&P. I've been looking at that YM too, because that's been a very volatile market. That's the Dow Jones. But I love the ES. I love the. I hope that helps you out. I hope that helps you out, Jake. It's an outside dog. But I kind of rather give you a technique short term than say it's going this direction today. I think you can see what's going on. I'm looking for this kind of day. You look for a continuation and an ending on the low. That's what I would kind of expect today if it doesn't reverse, by 2 or 3 o'clock. In any event, this is the MES. Here's the ES. If you've got another one you wanted me to look at, I will take a look at it. I hope I satisfied you, Jake. We've only got a few minutes left, but here's the ES market. I wanted to show it to you because this is what I like about it. When you have if you're using the 20 and the 5 and the 50, or you're using, the 9 and the 20, or the 34, I like, or the whatever it is, you can see. This is the 8, which is what we used to call the golden mean, but you can see how well it's not breached, not even challenging the 30, the 34 in this case at all. But you can see that the currencies tend to trend. This is where you got to be careful on the initial. I like to see that classic 1, 2, 3 in these changes, where you have a breakout and then you have a correction and then breaking the high, which didn't happen here. So taking a long position when you've got this kind of a commitment to the short side, this is just accumulation. Here is that loaded gun trigger again. Look at that. The small bodies, movement through the 8. Nice. And here, and look at the nice payoff. Another loaded gun trigger. Ooh, beautiful. One I wouldn't take. Actually, I would take, but I would get out before I breach the longer term moving average. I hope you're getting what I'm saying. Here's another. I love the full engulfing pattern. This is a nice trade. Not from a loaded gun standpoint, but again, what I like to do is take what you know and combine it with what I know, and we set you a plan that makes sense for you. I'm going to show you real fast, since I'm not seeing any We've got a new program called that, like I said, I'm going to show it to you here. I think I've got do I have it here? Let's see. Yeah, I want to show you this is a new brochure that we put out on CPR. You can see it's got everything but the paddles, but it's a cute logo, and I think it's more than cute. It's this we do things that nobody else does, and what this is about is a three-prong approach to winning at prop trading or any kind of trading. The first approach is matching the trading plan to you. I want to see what trading plan you're looking at. I want to show you what loaded gun is. Maybe you'll like it, maybe you won't, maybe we'll Frankenstein it, but I want to get a trading plan that fits you and your personality. Then I want to work on your head, and that's where the next situation is, where the third prong, where you work with my wife Tisha, who is a world-renowned mental trainer, subconscious trainer, has been on the magazine of many covers of many magazines in her career. She will work with you one-on-one to install what you need to do in your head. And then we have support, where we have a trading room that you can go to, where you can trade alongside, or just learn what successful trading is. Look, losing is a habit, winning is a habit, and so on. So the best thing that you can do is develop a winning habit by watching a successful trader who we have in our room. He's a guy named Danny DiMaria. You can read about him here. But if you want this brochure, I'd love to send it to you and send you what this is about in this CPR program. We're taking people off the mat, people who are determined to win. And I think I have here, do I have? No, that's not it. That's something else. Oh, I think I have it right here, right next door. But I can't see it because of this. So I'd like you to go, if you would put the link up, that would be great. This is the disciplinetrader.com. So if you go to the disciplinetrader.com, here's how you request the brochure. Go to the disciplinetrader.com, and there's a shot here called contact. Just hit contact and leave your contact. That's me as a kid. Actually, I think that was David as a kid. Thank you for that photograph, David. This is, and leave, just say CPR, show me if you forget CPR, the consistent payout roadmap, if you forget all of that, just say, hey, I just saw you, send me the stuff I saw on the presentation today, and you'll see, just fill this out. And so again, the disciplinetrader.com, and then utilize the contact. You can opt into a list also to get some of my videos. But in the meantime, the disciplinetrader.com, and then use contact and request. I'm going to get out of this and ask you again if there's any final. I think we only have about a minute left, if I'm not mistaken, maybe 2 minutes. If there's any, the 3-minute, is that a late? You used the 3-minute chart. Do you want to take a look at the ES there?
No, that was mine saying you have 3 minutes left.
Oh, I know you like to trade
and I
on the.
definitely did not have a microphone set up like that.
Yeah, I know. Well, I think it's me because my mouth was open. It could have been me. So,
Yeah,
let's take a quick look at gold, since everybody is talking about that, the gold and the silver.
sounds good.
I mean, how can you? It's hard to fight this when you get to give up like this. Here's that longer term moving average. It's hard to believe you're not going to have some follow up of what we're doing right now. The silver, something I like to watch. Again, you have a give up here. I don't believe the move is over, indefinitely, but I do think that we're going to be in mediocrity. You can see I do use this for position sizing also. This is the RSI. Thank you, HEMA. If you ever get a chance to watch HEMA Ready talk about the RSI, you should do that. And you can see we're hanging around the 50 percentile. So I can see an accumulation here for quite a while. All right, we're at 12:30. Thank you, David, for allowing me to speak to people and to be part of your organization here. Thanks.
All right, thanks, Norman. And since you mentioned HEMA, I'll take this opportunity to let everyone know that we have our big annual Women Teach Trading and Investing event next week. So let me find my schedule here. HEMA will be on Thursday. That's March 12th, but we have a full lineup of 3 days of great education for you next week, Tuesday, Wednesday, and Thursday. Um, Again, our 8th annual Women Teach Trading and Investing conference.
You mean Dave Landry and I can't come to that? Can't we? Can we
I,
voyeur? Can we do anything?
oh, you're welcome to attend. Yeah.
Okay, well, thank you. Appreciate
Yeah,
that.
the
Women always make better. I know you're coaching a lot of people, Dave. Don't you find that women seem to have less ego? They kind of follow the rules a little bit better.
Dave, you're still muted. Um,
There you go. You
Yeah,
find
I agree with you. I find women are they're much better when it comes to taking the risk and not getting I don't want to say as emotionally involved,
discombobulated. Yeah.
but the problem is a lot of them don't have enough guts, for a lack of a better word. Men have too much confidence when it comes to certain things, and women don't have enough. But women do make better traders when they set their mind out to do it and they're willing to live with the ups and
It's
downs. And
interesting. Maybe we should do, Dave, maybe we should put something together on couples trading.
well,
yeah.
there was a study done where when women got their husbands involved, they did worse with their trading, and then I'm sorry, they did better when with their trading, and then just the opposite, the women did worse. So there's definitely
Wow.
something there. And there was a hedge fund manager a while back that said women are too emotional, but I disagree. I think the women, just when they start getting beat up in the markets, they don't handle it as
Yeah.
well as men, but men do stupid things when they get beat up. So,
Well, I think your time's up now, Dave. Thank
all
you.
right.
Thanks for coming.
Yeah, it was a great day.
Thank you. Sorry to eat up your time, but I couldn't help it. Take care. Be well. Have a good presentation.
You too, Norm. Take care.
Thanks, Norman. Um, Also, I'm gonna want to mention real fast that we are broadcasting this onto YouTube now. So if anyone in the room has to leave the room, but you can still listen on YouTube if you want to. So, Dave, you should be able to share your screen now.
All right, let me get that shared. Okay, we should be seeing the S&P 500.
Yes, looks good.
Okay, while we wait for some, let me get the chat open too. But while we're waiting on that, obviously we're getting whacked today. It's not the end of the world, but it is kind of ugly, obviously. But we're well off the worst levels, and so when you come into a day like today, you have to be careful not, to keep your head while everybody else is losing theirs, because a lot of times you get a big move like this and it turns out to be a fake out or opening gap reversal. And so I'm playing a few opening gap reversals in a few places today. My position trades have gotten absolutely whacked. It comes with the territory. And it's kind of interesting that I woke up this morning thinking that, boy, I got it all figured out. And I immediately said, hang on, Dave, like Linda Rasky says, right when you think you have the key to the markets, they change a lock. So, but kind of an ugly open today. Let's take a look at gold real quick. I know Norm was just talking about that. We'll look at the GLD ETF, and it's so far so good. It's getting whacked today, obviously, but it did survive the 30 EMA. And if you look down here, we have Landry light, and that's just simply lows greater than the moving average. And we haven't had any negative Landry light since way back in this space, all the way back in August. So far the trend remains intact there. It's getting a little choppy, obviously, and getting a little crazy. And within the market itself, it's really mixed. There's some areas that are doing fairly well, and other areas not so much. So let's see what's in the chat today. APEI. And I'm going to go ahead and I'm going to change screens for that real quick. Okay, this is a stock that's in a nice longer term uptrend. It's a little bit on the thin side. The 30-day average volume is only 233,000, but it's definitely in a decent longer term trend. It's not set up at the moment. It would have to pull back, and it's a little choppy for me to trade and a little wide and loose, but it certainly looks like a a decent setup. Let me just show you one of ours today. It's getting green, but it gives you an idea. This is one of ours, and you can see that it was in a nice longer term uptrend, fairly persistent uptrend, and it pulled back to the moving average. And the entry was right around here, if memory serves. And so obviously this one's doing really well today, notwithstanding, but we're coming back from the lows. So far, so good on that one. Let's see what the other chat is. While we're waiting on that, let me just show you how a couple things real quick. This is my Landry 100 list, and today it's getting kind of whacked. There's only a few top gainers in here for now, but this is much better than it looked earlier in the day. Now, this is just stocks that are making 52-week highs, and if the markets get iffy like they've become lately, I might back off a little bit on this. But you can see some of these gold stocks that we got in, for instance, way back in April, 1,300%, and there's that AXTI I was just talking about. You can see it's up 500% since October 27. And what I do with this list is there's a constant window dressing. So something that's kind of ugly in here, and I'll just give you an example, a random example. Let's see. Probably like that one. That'll probably come out today because it's lost momentum, and I'm going to replace it with something that's making 52-week highs if I can find something today. So let's get back to the chat. Okay, I'll keep going then. Now, you can't just rush out and buy 52-week highs, but if you buy enough of them, you can, as you can see. So you can see we've got some down 20% or more in here. But then on the upside, again, some of these numbers on the upside are just absolutely ridiculous. And that's a testament for trend following. Now, I don't actually trade these stocks per se. I use this as sort of a feeding ground for some of my momentum work. And I also look at a couple thousand stocks every day to give you a feel for it. And by the way, if you want to get good at technical analysis, it's kind of like when I'm presenting in person, I often ask if anybody's a musician. And then I ask, how'd you get good? And they look at me like I pooed my pants, and they say, well, I practice. I think you want to get better at reading charts. You should look at a lot of charts. And I've been looking at a couple thousand charts a day. I did the math probably 5 years ago or 10 years ago, and it was like some ridiculous number, like 15 million charts over the years. But you know, I go through them pretty quickly when I'm looking for setups, and I find the best setups tend to just jump out at me. Let's hop back over to the other share, and then we'll do this. We'll take a look at Bitcoin. Any other markets. Obviously, if you want to look at something, let me know, and I'll be happy to take a look at it. But while we're waiting on that, let's take a look at Bitcoin. Now, again, this Landry light, and I like to use a 30 EMA, and I think around, I forget exactly where it was, but at 85,000 or something, when we were banging out new lows in Bitcoin, I put out a tweet that it's always darkest right before it gets more dark. And that's just a lot of people try to catch a falling knife thinking that Bitcoin's on sale. And I have a friend from the gym, and he has, I think, nearly all of his net worth in Bitcoin, and that was up around 120,000 or so. And he was asking me if I thought it was on sale, and I explained to him, no. Again, it's always darkest right before it gets more dark. So it remains in a downtrend. You can see we've had very little Landry light, not even 10 bars of Landry light, and that's lows greater than the moving average. And you can see that's what I like to call illustrated down below, because an indicator doesn't actually indicate. It'll help you to see what's already going on in the chart. So based on this, you can see this is no bueno for now. Now, if you get back to the P, something else I tweeted out, I think yesterday, a day before, is that notice that we had all this green back here, and notice we've had this wonderful trend going back in time in the S&P 500. But then if you look back to December, you can see we haven't made a whole lot of forward progress then on a net basis. Now, I like to just draw a line on a chart. Where are we now? 67.80. Where were we way back in October? 67.80. So you can see we haven't gone anywhere. And if you look at the Landry light down here, we haven't had more than 10 bars of upside Landry light, again, meaning the lows are greater than the moving average in a long time. So sideways and choppy at best. One thing that you need to pay attention to in the S&P 500 would be the bow tie moving averages. And let me just show you those real quick. So Landry light, good way to stay on the right side of the market. Bow tie moving averages, another simple way. And I don't use a lot of indicators, but the bow ties and the Landry light can really help to keep you on the right side of the market. Now, uptrend proper order is the 10 is greater than the 20, and 20 is greater than 30. And you can see the bow ties flipped over right around here, way back last May. And they stayed in uptrend proper order for a long, long time. We had a little turn down here, but that never did materialize to the downside. So the bow tie moving averages, when they come together and spread out, it looks like a bow tie. That's why I call it a bow tie. And it's a 10 simple, 20 exponential, and 30 exponential. I like the way the three of those interact together. A lot of people have tried a lot of different things. If you try 3 exponentials, it's going to be very erratic, I find, and it's not going to be as clean as these signals with the simple moving average. But anyway, so you need to pay attention to these. When we start having downside bow ties, meaning that the 10's less than 20, less than 30, which we will have likely after today. And the NASDAQ has a return with this, and we'll take a look at that in just 1 second. Yeah, Neil, we'll get to that in just 1 second. Anyway, so the bow ties can really help to keep you on the right side of the market. Now, bigger picture wise, if you take a look at the weekly ones, they can really help you out. Now, there will be some lag here, but you can see there was a bow tie back during that spill last April and February and April. But the thing is, the bow ties are really better for a more gradual rollover than like a sharp rollover, because if you have a V-shaped recovery, the signal tends to be a little late. But longer term, paying attention to these bow ties can really keep you out of a lot of trouble. I think we had one to the downside right before the pandemic kicked in earnest. And as you can see, when the market bottoms out, they turn back up. So this is a good longer term way to know where you are in the markets. And then right now, we're still in a much, much longer term trend. So far, so good as far as the weekly bow ties are concerned. And let me just show you one more thing while we're waiting on picks to come in. Keep them coming, please. But we take a look at the TFM 10% system. And this system you sell when you have a close into the 10% or more zone, meaning that you're 10% or more away from the 52-week closing high, and also below the 50-week moving average. So if we take a look at the P's, like back here, right on this day here, when was that? Okay, so you can see 2007, you had a sell signal right here, and obviously that was a big one. Now, you do get a little fake outs here and there, but it really can help to keep you on the right side of the market and give you bigger picture perspective. And one of my clients, he likes to think about getting out once you're down 5% or more, and that's what inspired me to put these zones in here. So this zone right here, this light pink zone, that means the market is 5 to 10% below its 50-week closing high. So the top of this zone here would be your 50-week closing high. So you can see, and know it's scary when you come into the market in a day like today. And believe me, I've dropped a few F-bombs and it was like, holy moly, you know? But when you look at it from a bigger picture perspective, we're still in a pretty good uptrend. Now, a lot of sectors are mixed out there. If we have time, I'll walk you through some of that action. Some areas like software, absolutely abysmal. Let's take a look at this. That's a weekly chart. Take a look at the daily chart. Daily is really ugly with software. And then we'll get to your stock picks here in 1 second. So let's get back to let's take a look at the bow ties. And you can see we had the bow tie in software, these are especially powerful when you're coming off all-time highs since the last bow tie to the downside. So you can see we made all-time highs in software. We failed to get back to those highs. You had the bow tie back here, a little bit of a pullback that completes the setup. And you can see we've been in mostly downtrend proper order since. This yellow means that you're not quite in downtrend proper order, meaning that one of the moving averages is above the other. And then when it's red, it means that the 10 is less than 20 and 20 is less than the 30. So the question for NR is, that's Neil. Hey, Neil. This is going to be NUGT, which is obviously going to be gold. Now, these leverage shares, even though we've had some great trends in them, I don't recommend holding these overnight. I would much rather hold gold stocks. We're long KGC and TFPM, and then in silver, we're long AG. But you can see this is KG. This was a pattern I call Landry light pullbacks, and I hate to keep switching up on you, but let me just show you this real quick. So I would encourage you, where I'm getting with this is I would encourage you to look for setups in individual stocks. And we got long this one back here, way back in May, and we've been long ever since. And I think this is, it was until today, at least, we were up over 100%. And we have what you do is once you get in the stock, you take partial profits at the initial profit target, which is the entry minus your stop, and then you add that back to the entry. That's the math on that. We take off half of the position, and then we trail a stop loosely on the remainder. And so far, so good. Our stop is probably down here around 30 or so on this one. So getting back to NUGT, again, I prefer not to hold these leverage shares overnight. You end up with kind of a decay, so to speak. In fact, if you take a look at the invert ones are even worse. The invert leverage ones, they all eventually go to zero. Like SQQQ, for instance, if you back the chart way out on that one, I think it was like 500 million or maybe 1 million. You see this? Okay, so that was 400,000 shares. It was way up here. Yeah, so it was at 10 million, and that's not split adjusted, okay? And you can see that eventually they all go to zero. And you don't want to rush out and buy them just because they're low, because they'll reverse split you to death. So this thing has been reverse split a bunch of times, and so they all go to zero. So I would not hold something like an inverse share for other than an intraday trade. And the same holds true for the leverage shares on the upside, even though you can gain some exposure over a period of time with them, but eventually the slippage is going to catch up with you. And if you read the, not that you would ever go out and do this, but just take my word for it. If you read the prospectus for these leverage shares, they're only trying to match the 1 day performance and not the longer term performance. And if you get into the math on all that, it's a lot different as opposed to like a buy and hold type of trading with these leverage ETFs. So they're just trying to match the 1 day price change. And that, believe me, that's a lot different than the longer term price changes. And that could create what I call a decay in these things, but very hard to hold on to a longer term unless you get into a rip roaring bull market like we've been in gold. So anyway, that's a long story on that. Let's take a look at Bitcoin. Again, we'll take a look at it from a perspective of a 30-day EMA, and you can see lots and lots of Landry light below that. So that's in a downtrend. It's something you want to avoid. Obviously, you want to avoid Ethereum too. So that's looking even uglier. And by the way, I don't know who said it, but if you listen to me often repeated, all asset classes will lose at least half their value at some point in your lifetime. So look at Ethereum up here close to 5,000. Now we're down here under 2,000. So that's lost half its value fairly recently. Ditto for Bitcoin. We're at what, 127, almost 130. And now we're down here at 68,000. So don't try to catch these falling knives. And again, it's always darkest right before it gets more dark. Okay, any other setups you guys want to look at? Any questions? So let's just hop back real quick into the other charts, or the sector charts, I should say. And let's take a look at the recent sector action. So it's been super mixed lately. On the upside, you've got defense, obviously, all the wars and stuff going on in the world, I suppose. I try not to confuse the issue with facts, but take a look at defense. You can see just banged out all-time highs just yesterday. A little bit of a pullback today, but it still looks okay. And I think that we could see some setups here fairly soon. And like I just said a second ago, areas like software, just look abysmal. And internet would be another one of those areas, just not looking so hot. Semiconductors have been looking pretty good, but now they're breaking down a little today. I'd like to see today's gap closed and obviously have it going to make new highs. DBD, I think that's going to be Diebold. It's going to be a little bit thicker. No, it's not as thick as I thought it would be. Okay. So this looks pretty good. It's actually a little thinner than I thought it would be. This is not bad. I'd say I give it an okay. It's kind of a TKO kind of move. TKO, trend knockout, is when you have a market in a strong trend and has this knockout type of move, and that shakes out the nervous Nellies, the weak hands, so to speak. And it also attracts eager shorts, which could help you out. So this is actually a little thinner than something I would normally trade, or I'd say on the cost, 300,000 shares. It seems like, by the way, going back years ago, you could trade thinner stocks. Nowadays, I don't know why. I don't know if they're double counting the volume or something. So I find, ideally, I like 500K or more, and then much more than that on the short side. But I will go a little bit underneath it. 300K is probably on the cusp of what I would trade. I'd give this a not bad as far as the way it looks. It has a bit of this double top knockout look to it. I'd actually like to see a little bit more pullback to shake out a few more people. But that's I'll give you a not bad on that one. That's looking pretty good. Let's see what else is going on. Robotics and AI today, notwithstanding, has been doing really, really well. But in a lot of these markets, and as soon as we're done with the webinar, I'm going to keep an eye on a few. I'm long a couple things on opening gap reversals, and I like to see some of these markets possibly have opening gap reversals, but like this robotics and AI, if this thing starts pushing in above its highs, that might be worth a potential day trade. I'm not a huge day trader, but sometimes you get these opening gap reversals like this, and it's worth a shot. Let's take a look at the spiders, for instance. You can see, you got this gap open, you got this big slide, and now it's trying to push back higher again. So that's a possible trade you could take on an ugly day like today. You don't want to be a hero, right? Catch that falling knife, but you can sometimes catch a nice intraday reversal. Okay, any other stocks? Anything else you want me to look at? Be happy to do that. Rare earths, again, banging out new highs yesterday, and then today not so much, but we could get a little bit of an opening gap reversal there. Rusty 2000 is a bit of a bummer today. You can see it's been hanging around this 30 EMA, looking like it has the potential to break out of this pullback or base, however you want to call that. But today's action is kind of ugly. I'd like to see us get back above that 30 EMA and stay there. Some areas like foods have been doing really, really well. Kind of hard to get excited about the foods, but they've been in a pretty good run as of late. Agribusiness, none of all those areas looking pretty good. And that actually looks almost like a setup. I don't like the gap that much, but it did kind of knock out down to the 30 EMA. And that also sets up what I call a Landry light pullback, which is a very simple pattern. And you're just looking for a market like the AXTI to be in a really solid uptrend, ideally the accelerating uptrend, and to come back down to kiss that moving average. And you look to enter as the trend resumes. And I'll show you the open portfolio real quick. We did get stopped out of one this morning, and I'm actually playing the opening gap reversal. I did get stopped on this one. I'm playing the opening gap reversal, and I'll probably take it home if it comes back up. If it gets above 46, it looks like it's a major reversal. If not, I'll probably flip it out. And I'm making it sound like I do a lot of day trading or I'm a big day trader. I'm really not. I try to pick my spots carefully and not be in and out all day like the rat going for the cocaine. But sometimes you do have these opportunities present themselves. This is a silver stock we're long. Again, the Landry light pullback. I just did an article for a technical analysis magazine in Spain. It'll be out later this month. And this was one of the charts I use. I like to keep it live or use live charts in my presentations in my articles. But you can see, again, there's that Landry light pullback, nice acceleration to the moving average. And I also just put out an article, by the way, on Substack. And it's substack.com/Dave Landry. I think that's it. If not, I can get that link to you before I log off. But nice little Landry light pullback there. So far, so good today, notwithstanding. Obviously, DNN, another Landry light pullback we got in right here. Nice accelerated uptrend pullback. This stock's a little bit choppier than I would prefer, but this is uranium related, and those stocks can be crazy. There's the KGC again. We've been long this one forever from this Landry pullback way back here. Hopefully, Dave will invite me back a year from now. We'll still be talking about that one. There again, there's the MDLN. Nice little opening gap reversal, though. Might be worth a shot. PL is pulled back to the moving average, and it's trying to rally out of a pullback, but so far it hasn't done that. TFPM is another one of these golds that we got long way back in May. It took off, and then we took some heat, but fortunately it didn't stop out. Thank you, Dave. So it's DaveLandry.substack.com. I appreciate that, David. All right. Any other questions or anything you guys want to talk about? Let's take a look at the NASDAQ real quick. NASDAQ hasn't been doing incredible as of late. You can see we're well below that 30 EMA. And if we take a look at the bow ties on this one, you can see that we have bow tied to the downside a while ago, and that's off an all-time high. So that's a bit of a concern. We'll keep an eye on that situation here. Ideally, I'd like to see it get back above these moving averages, but now we have a lot of overhead supply, meaning that anybody who bought in this range might be looking to get out at break even. So that is certainly a bit of a concern. Biotechnology, break it down a little bit below the moving average, below the 50 simple moving average. It's been looking pretty good up until today. So ideally, you want to see it get out of that range. Okay, any more? We've got a quiet bunch today. Probably the best thing to do in this market is not a whole lot. Less is more, obviously. It's just getting a little choppy, a little crazy. Volatility has really increased. So you really need to pick your spots carefully. And the landscape is changing quickly. So you have a situation where gold was looking pretty good, and then you come in to a day like today and it's getting whacked pretty hard. So you might have to pull in your horns a little bit there, just honor your stops just in case of anything that's remaining. Okay, we could probably squeeze one or two more in if there's anything you guys want to talk about real quick. Transports have been doing really well. I've never really found a lot of opportunities within the transports, but it's worth noting they're doing really well. And keep in mind that things change, like utilities are now starting to act a little bit more like momentum stocks, and they've been doing pretty well as of late. Again, today notwithstanding, so we could see something set up here real quick. It looks like my time is just about up. If there's anything else, let me know. You can reach me at DaveLandry.com. My newsletter is DaveLandry.com/newsletter. And what else? You can get my book if you want a free copy of all three of my books. That is, you can go to DaveLandry.com/free-book. Okay, thank everybody for attending. Of course, thank you, Dave Cosmitter, for having me back once again. And may the trend be with you. Thank you.
All right. Thanks, Dave.
Thank you.
Great analysis as always. So thank you for being here.
Glad to be here.
And right. All right. So just a reminder for everyone, all of these sessions are being recorded individually and will be available on TimingResearch.com as soon as I can get them processed. The full nearly 12-year history of Timing Research is available on Timing Research, and if you search for Timing Research on YouTube, you can find them there as well. So, all right, thanks, Dave.
And you'll see a version of me from 12 years ago. Some of those old ones.
Yeah. Dave was on one of my first episodes of the panel discussion, and he was a great moderator for a long time.
Thank you.
So yeah, I'd love to have you back on the panel discussion show.
Yeah, just ask me and I'll show up.
Right.
Thank you.
Right.
Have a good one. Bye-bye.
Thanks, Dave.
You're welcome.
All right. Next up is Michael Filighera. Michael, are you there?
There we go. It wasn't unmuted.
Okay.
Now it did.
Yeah, I was about to say, it looks like you're still muted.
Yeah, I wanted to chime in and say, yes, Dave was the first and I was on him for the second.
Yeah. Yeah.
Cloud Forecast News they were back then.
Yeah.
So
Yeah. I'd have to go.
it has been. We should have a reunion.
Yeah. Actually, yeah, you were on the second episode, but Dave wasn't actually on until like the seventh episode or so. But then he was the moderator for a long time.
Right, right. That's what I remember then. That constantly
Yeah.
being together with him as he was moderating.
Yeah.
So yes, I agree. So let's see.
All
Okay,
those recordings are still out there.
there you go.
Back from August 2014 is when it started.
I know. Wasn't that a million years ago? Something like that.
Yeah.
And whenever you're ready, I'm ready.
Okay, I am double checking my setup, and all right, I am recording again now.
Great. And good morning, good afternoon. My name is Mike Filighera. I am the chief cook and bottle washer over at logicalsignals.com and also tradershelpingtraders.com. And the difference between the two is that Logical Signals is my website, and Traders Helping Traders is the website that's associated with YouTube. And on YouTube, I produce 4 updates a day, 2 in the NASDAQ, 2 in the S&P, 1 in the morning, 1 in the afternoon. And then I also do weekly podcasts on those 2 markets, plus gold, silver, and platinum, all on and available on YouTube. Since I'm going to wait to see who comes in and who asks and puts a request up there. So what I do and what I am showing is silver. Interesting, since when I popped on to do this, Dave was talking about gold. And yes, all the precious metals are taking it on the chin today, so to speak, with gold being down 208, platinum being down 241, and silver being down almost 6. Now, and all of them, actually, I'll be right there. I'll do that gilt for you right quickly. Thank you, Jake. But just to finish up here on silver, what I believe they're doing is the second leg down from the doing this. And the whole thing is going to be an Elliott ABC. So I believe we started the C wave. And these are the levels that I would anticipate that the market is going to come to in silver before all is said and done. And then that's going to form one great big X wave. And then we do another rally, believe it or not. The volatility in the precious metals resembles somewhat what we have going on in our own equity markets, satellites. So Gillette Satellite Networks. Okay. First venture into this stock. So I'll always start with my maximum monthly chart. And obviously, this goes back. Let me see if I can get more. I can. Wow. So this company came online in 1993, so they've been up for a while. I'm going to say they had several stock splits because of this ridiculous price over here. So that's all post splits, unless the stock really did go to 3,630 in February of 2000. Being a NASDAQ stock, that wouldn't have surprised me. I was trading mostly NASDAQ stocks at the time. So obviously we did a major collapse down to almost back down to $2, it looks like. And now we're kind of working our way higher. So let me take it off that monthly so we get a little bit of a better view. So that would be that low, I think. Now $4 would be the low. I'm probably going to do wave 1. Yeah, not a good sign here, because what I can do is 1, 2. That looks like a 3. See, because we have 1, 2, and then 1, 2, 3, 4, 5 of 3. And that's an A and that's a B. I would say that you stand a pretty good chance, although this could be an ABC down. Let me take it down one more. See if I can look at this on there. ABC. Yeah, actually, it doesn't look too bad. 2 choices. One is that this is A wave down. This is going to be a B wave up. And if that was the case, you're just going to run your fibs this way. Oops. because you'd be looking for another dip down, and what usually is going to be the case, this would be wave A, this would be wave B, and wave C. And wave C is normally the most common fib retracement, is for 100%. So wave C would be equal to wave A at $9.91. But you're also going to have the second most popular, or the second most common, is 0.618. And that's down at 1277. Either way, it does look like it wants to revisit or do an additional move lower. Again, I don't know what produced the gap. If it was in February, could have just been the market in general. So, but nice rally up off of that low, which was what, 12, almost $13, got up to 17. And so, and not even doing too bad today, recovering after being hit this morning along with everything else. So to the upside, I would take that off. And again, looking like that's the low. And actually, that's the low of 2. And then we have, this is 3. And if this is 4, then I need to take it back out to that weekly. And I go like this. You run a different fib, wave 1 over to the bottom of wave 4, and that gives you wave 5, which is why not that good, because you're just going to go back up here. And come on, there you go. With the potential, being if that's wave 1 and this is wave 4, then it's going to either be a flat and have a tough time getting up to here, because you can see that's 1.618. And usually what you're looking for here is that this fifth wave, right? So if this is 1, 2, 3, 4, the fifth wave would be equal to the first wave. And that would put us just back at 100% is at 1692, which we're hitting today or this week. So again, a little bit confusing, unless if I take a look at this a little bit differently, and this actually finished 5 up from this level, then you're going to run a fib like this, and you're going to run it up to there, and that shows you coming down. We came down pretty much almost to 50. So again, it could be pretty much complete, and I don't have anything to kind of put some motion to moving higher. Let's go back out to that maximum monthly. Yeah, your first one's going to be 2270, obviously. And then you have the 200 period moving average. That's on a monthly, and my maximum monthly. But you could always run this one. That'd be very long term. And you're just putting your fibs back out there, and you're going to connect it to that low. And wow. Again, this is all post-split, I'm going to say. So it becomes very difficult to say, well, is it going to go from 20 to 800? I don't think so. Unless something really great happens to this company. Yeah. So it was splits that kind of brought it down. And now they're just having, well, they're doing okay, but still, I would not say that much, because that's how you're going to connect your fibs on this whole move down, and what to expect going back up. And it just doesn't function properly because of this, I'm going to say stock splits. If the stock really did drop from that level all the way down to $2, then something's up. Let me see what I could do. Yeah, you just can't get them there. Yeah, see, I don't have anything to anchor it to give me more above all this. So I would say that you kind of got to go out and you look at this. So you got, 38, and that's 3. No, that's about as best I can do, to be honest with you. Oh, let me try one more. And I'm just putting the fibs, which is nothing more than just putting relationship together. There, that's a little bit better. And that's running it from that low up to that high, down to that low, to get more gauge on what this could be. You got 100%, which is going to be right there at that high, which is 2473, 3752. And then on a real push, 58 to 91. Now, I have no idea how this reacts to the overall market, but I'm going to feel that it rallies when the market rallies and it sinks when the market sinks and kind of gets sold along with it. And market-wise, since I believe it's probably in the NASDAQ, that, yep, it is, that I'm looking for a larger, longer-term top in the NASDAQ, and that is in the form of a primary third wave. And you see I've kind of left it out here. I did mark it, but that got changed. So this is my come on. The screens get kind of funky. So I got the one primary 1 and 2. This was the NASDAQ's collapse actually in 2000 to 2002. So that was the NASDAQ crash, equal to what I would think the 1929 to 32 crash that we saw in the Dow Jones and in the S&P. So that's the equivalent. So we can't forget that the NASDAQ's really only been around since in the futures market since 1999. In the cash market was 1985. So not as much time. So it's a primary third wave that is finishing versus a cycle third wave in the other markets. So again, I think that the NASDAQ is kind of working its way, finishing up. Let me see, where can I go? I can go here. I had, you see they're sitting right there, all of my topping. I put them here because I really felt that the market had reached a high and was basically coming off. I had one alternate view which suggested this is an intermediate, excuse me, a minute fourth wave, and it was here. And that would have concluded that this was the high and that we were starting to come down in a larger primary fourth wave, which would initially stop here and eventually end up at the 2022 lows. 2022 lows were just above 10,000. And this low is 17,079. So when we're trading 24,600 on an uptick, we reached a low this morning. Let me bring this all the way down. We reached a low this morning at 24,352. And I actually don't think it's over yet. It may be, if I'm looking that we're in a larger C wave coming down. It projects down to here, 23,401. And that's just in the NASDAQ composite. And that's in the futures market. There would be a little bit of difference between this and the between this and the cash market. But it's the cash that gives us more clues. The futures market has premium and trades longer in terms of that the cash market's open from 9:30 to 4 Eastern Standard Time, whereas the futures market trades in Globex, so it trades overnight. And so it's really only closed from 2 p.m. to 5 p.m. in Eastern. Other than that, it's trading. It always trades. So, excuse me, that creates a few things here in our charts. So I do often go there, but in any case, I think that we may have, let me just kind of open this up. Where are we? Yeah, we kind of are probably trying to get above that high, 24,724. That's after hitting the low. So, and I don't think that was going to complete the whole shebang. So it's a little bit on the difficult side right now, as usual. And markets do this. And what it is, it's like we're turning and we're jumping into Microsoft again. They didn't like it this morning, though they love it this afternoon, all based on news. And you'll see this in markets that are in transition. Everybody's searching, where can they put their money? Where can I put? And so they believe the only place they can do is buy some other equity. And so I think there's a lot of other safer places to stick your money because it's saying it basically is almost like, for example, Apple this morning. Apple caught a bid. Why? Well, because today's Apple's big presentation, new products, new improvements, et cetera, and it's just this big event down in Cupertino, which is not far from where I live, in the San Francisco Bay Area. So when you see that and it runs it up, and what was today's high? I think this was the opening high here. Was that today? That was pretty much on our opening. We ran it up to 265.56. Currently trading 260, almost 261 again. And the low so far is 260.13. So again, everybody, oh, that's a safe place. Apple always just does really great. And so they run over and they put their money into Apple. Then suddenly the sellers come back in because it's just is a part of the Dow. It's a part of the S&P. It's a part of the NASDAQ. And I don't know, but I think it's a part of the Russell, one of them. But at least the third, the Dow, the S&P, and the NASDAQ. And each one of those, Apple has a weighting, right? Because the Dow is a price-weighted index. The S&P and the NASDAQ are cap-weighted indexes. So Apple is a big company. So it will sit up in the top positions in the NASDAQ and also in the S&P. And what I mean by that is that the percentage that Apple moves contributes more to the overall move in the NASDAQ and in the S&P. And that's not so hard to kind of go. You can go to there's a wonderful service. It's called Slick Charts. And Slick Charts, they'd like you to sponsor them, but it's pretty much for free. And just if I'm taking a look at it right now, I can put this over here just real quickly, just right over there, and you can see it. Is that NVIDIA is 13.15% of the move that's happening, and it's up 251. So there's Apple, number 2. 11.61%. So what's happening in Apple contributes 11.61% to the NASDAQ, to wherever, up or down. And then you can just follow it. And you do get an idea of when you see, that's why. Why are we not, blasting because Microsoft's doing great? We've come up off the floor because Microsoft under 10%. Right? Because it slipped in price. Once it gets itself solid, this needs to be updated. Once it gets itself in a pole position, now you see NVIDIA, Apple down. So the same thing, 11.60, 13.21. And so that's overriding that. Not enough, because then we have others. Because you can just see all the way down. What? Oh, thank you. There's all the ads. So anyway, that's a great thing. And just so that you can realize what the markets have, or what is really in control of the markets. Is there anybody else that has something that they want to look at or get a little look at? If not, I'm going to go over to my other favorite market, and I'm going to talk about that one. No, it's not APE. It's the S&P. So also had a little nosedive this morning. Now doing a little rally back, which I actually need to make an adjustment to there, put it down to there. So you can see we're almost up to the 50% marker on a bounce. On a bounce, and I probably can put the wave 5 there, which is going to make it a bigger bounce. So that should be interesting. So here as well. Hi, Jake. You're back. HRMY. All right, we'll take a look at that and then go to there. Harmony Biosciences. Okay. And another NASDAQ stock. Let me pull this one out all the way here. Okay, this one might be a little bit easier, but boy, not really, because this resembles the NASDAQ itself. Um, this became or went as publicly traded since August of 2020. So it has, 6 years or five, at least five. And it kind of went down, then it rose up. I'm looking at this for just a moment. No, a little bit tough to call it five waves, but I imagine you could. Let me run it down on just a line chart. Yeah, you can see it's a little bit difficult, but I can do 1, 2, 3, 4, and a 5. And 3 is probably the longest. So if I did a 1, 2, 3, 4, 5, then an ABC down, it's still just kind of doing nothing. And what that kind of tells me is that, and I'll go back to the bar chart, is that was wave A, and this has all been a B, very expanding triangle, could be. But I would say that this finished this bounce, and this is 1, 2, 3. That's a small 4, and we got another 5, and that could be the first leg down, or it could also be hit enough support where it would be able to bounce off of that. But if we just look at the patterns, is what I do, and on Elliott, you have impulse waves, which can be up or down, but they're going to be labeled 1, 2, 3, 4, 5. And corrective waves are labeled ABC. And so it's 5 waves versus 3 waves. So 3 waves to correct, 5 waves on an impulse. Impulses can happen as well as corrections, either up or down, depending on the trend. So in this case, it's a 3 down. So I'd have to say that is A, and this is just a big old B, and you could put that B there, and now it's going to do a C wave. And the expectation would be that 90 there, and I would put it up to there, and pretty much equaled that high. And so what you're looking for, you look for this is A and that's B, and you're looking for the C wave. Most common, believe it or not, A equals C, and that's just too low. That's down into the negative. So we realize that that's not going to happen. So you have definitely should make a new low below here. And this low is 1861. And so you'd be looking for it to come below 1861, maybe as low as $14. Again, not really knowing what could possibly do that. And the overall markets right now, I got to tell you, they've just decided they're just going to turn around and just going to start buying it all back, which has been so typical lately, where we get slammed in the morning and then they spend the balance of the day rushing to get everything back, or just to reestablish, or to do what they're doing. And there's not necessarily, I don't think, anything in behind it saying, well, now we're turning bullish again, or more broadly what they might be thinking about. I know that they take a look at Microsoft because there's some news on Microsoft that OpenAI introduces Chat or GPT 5.3 instant system card, which I guess can go into Copilot or maybe can be usable with Copilot, not really knowing. But that's kind of what the news is on Microsoft. But it's also affecting Oracle. It's also affecting STEM and a few others. But one thing is that I just think no matter what, again, the market comes down in 5, goes up in 3. And this is now on my short term in the NASDAQ. It's kind of showing up as 5 waves, which I'm not going to look and find it on there. I'm not going to look and find it there either. I'm going to bring it down to the hourly chart. And we're going to go inside there like I did before and bring it up a little bit and then open it up. So, right. So what's going to happen is 3 goes here, and this could be an A, and it is putting a C wave in, but I think that's all going to be a part of it. So it could be from here, the low's all the way down there. And then we have A, B, and then a C going back up. And because if this is going to be wave 3, we have a wave 4. Not going to work because it's already overlapping. So one other way I could do is say this is wave 1 of 3. So I can kind of get rid of. So there's a lot of different things. And the other part about what's happening right now is the markets are very confusing. Very confusing. There's a very, I don't know how heavy or how strong or how light this whole thing is. But there's a whole camp that they're looking for new all-time highs. They think the world is still rosy, but maybe not. They don't think it's rosy. There are counts that I can give you, particularly in the S&P, not in the Dow anymore. Because to tell you the truth, the Dow this morning broke below a level. It's now recaptured it, but it broke below a level which put the high of cycle wave 3 in place in the Dow. I can show you that actually, since we're kind of in between people asking. Oh, you're right. Thank you, David. But I just go one quickly and just show you the Dow. And I have to go out at least to my daily. See that marker right there? That low was for wave 4. Once it broke below that wave 4, it sealed this deal, that this was complete. Prior to that, it could have been that if it stayed above it, it was just like a 1 and a 2 or an ABC, and then it was still going to go up and make another run. So this kind of goes 1, 2, 1, 2, 3. See how it's, but it's the intensity of when they come back into the market are really throwing things off because there's so much going on underneath all of this, and I only have now literally 3 minutes. Markets are moved by options, and options trading has dominated and expanded and is now very, very, very large. And there's a lot of money swirling around in our options markets. And so when you trade options, they carry what we call the Greeks. And one of them being gamma, which is a measurement to show like if there's a 1 point move in a particular in the underlying, what does that do to that option, et cetera. But they're used a little bit differently now because we have gamma levels, and some of those produce like a volatility trigger, or where large gamma positions are showing, whether positive gamma or negative gamma, and that all kind of goes together. When those get triggered, markets make a move, whether up or down. So it becomes extremely interesting, actually, to what's controlling what. And is the market really bullish, or is the market really bearish? And it's like it's neither. But we see this happen. Same thing yesterday. We nosedived and then bought it all back. And so when that kind of goes on, it's like, oh, everybody's bullish. It's like, that's terminology. It's the options. And it's what's happening within dealers. Dealers are the people that'll make that they make the market. And when they make the market, it becomes they're hedging, right? So they're hedging everything. And if the market drops, and they're either going to have to adjust their hedge, or they're going to have to roll the position, or something is going to have to happen. So we see that a lot of times, and we see these declines or even these rallies, they're going to gamma levels. They go to a level to take out that gamma and force the adjustment to the underlying, force the adjustment via the stock. And a lot of that can be done by dealers, or a lot of it, I mean, many of you have heard of like Citadel and other companies. These are big, big companies that make markets in everything. And so what's really in control? Not us. We're just the ones that follow it. And I am going to say thank you. And I am going to get ready because I believe the person who comes after me is right there. So, David, I'm going to kind of let this go back to you for right now so that you can get yourself all ready. And thank you very much.
All right. Thanks, Michael.
You're welcome.
Great analysis. So yeah, thank you to Michael Filighera. And Next up is Wally Olopade. And in case anyone listening missed the panel discussion yesterday, both Michael and Wally were on the panel yesterday, so that is available on TimingResearch.com, and you can be sure to review that later. So, Wally, how are you today?
I am doing wonderful. Thank you so much, man. And yes, it was a fun time on the call
Yeah.
with Harry and Michael, as well as the options professor yesterday. Thank you.
Yeah. So, all right. All right. Go ahead and enter your symbols for Wally, and I'm double checking my setup. Okay. Are you ready to go?
Yes, I am. Yes, I am.
Okay. I'm going to start my recording again, and then you can start your analysis. So I am recording again now.
All right. Good afternoon, everybody. Go ahead and give me your stocks. Let me see which ones you would want me to analyze, and I can use the software that I use called rightside.io to kind of help see what we should be looking at. All right, BDB. Let's take a look at that. BDB. What stock is that, by the way? BDB. Know if I've ever heard of that one before. All right, so BDB, which is Diebold, is that what it's called? Diebold Nixdorf Incorporated. Okay, very good. So right now we can see here today's directive, which is the action, and again, most of this data is based on what happened last night. And so what it's telling us is to, as of last night, make sure that we have stops in place is what this is telling us. Okay. Now, I would say that one of the things that we should be careful of with this one in particular is the fact that we see a double top at the top of this thing. Let me see if I can bring my cursor up here. Give me 1 second. So if you see where I drew this line right here, if you guys can see that, that's a double top right there. And so all this tells me is that we should be expecting things to kind of like go lower. But what the software is also telling us is, look, you definitely want to practice caution. Are you guys able to hear me? I see that it's saying my internet is unstable. I'm just making sure. Please let me know. Give me a Y if you guys can hear me well. All right, can you guys hear me well? It seems like my internet. Yes, you can? Okay, cool. All right, cool. But yeah, so like I was saying, the double top, be aware of that. So my thing would be if you're expecting this to go higher, not right now. Does that make sense? If you're expecting this to go higher, not right now. The only other thing we could possibly do is maybe go to the weekly time frame and see if there's an opportunity there. And if you look at this weekly time frame, again, these are all top-in patterns that we're seeing here. These wicks right here up here is letting us know that we're going to struggle to go higher. And right now, it's the directive or the action that we should take is like, hey, wait and hold. You can also see up here, the gauge is telling us that we're at the top, approaching risky. So you can see this right here. So all this just lets me look, this is not a stock you want to jump into right now. This is that if you're already in, try to start looking into taking profits and not necessarily trying to jump into this. Does that make sense, Jake? And so hopefully this helps. I mean, to me, it was like like I said, on the daily time frame, go ahead and place your stops and, try to see if you can collect some profits off of that. But definitely not, it's time to buy. All right, let me check one more thing, which is the monthly time frame. And even on a monthly time frame, this stock has just ran away from us. And so it's approaching that risky stage where it's like it's too far gone. It's too risky to try to jump into this at this point. So your best bet is for it to allow it to come back down. And what would happen is that the needle will come all the way back down over here. So even if it's on the daily time frame, we can go back to the daily time frame and see what, right now you can see right here. It's just telling us, look, we need to be selling. We need to be getting out of this. Now, the overall sentiment is still bullish, but it's time to take profits. Does that make sense? And so that's kind of like what this one is here. All right. Michael wanted to see Target. Let's take a look at Target and as well as Oracle. So let's go look at Target on the daily time frame. And so as you can see here, Target is telling us that we are in a bearish sentiment. It's time to sell. We should not be buying Target. The sentiment is bearish. This is bearish right here. All this is telling us that we are bearish on Target. It's telling you to exit your longs. If you do short, just make sure you have some stops in place. That's what this is telling us here. Again, similar to the last stock that we looked at, too many top-end patterns showing up over there. So that resistance level is going to be a challenge. It's going to be a challenge. So all this right here, it's going to be a challenge. What I would want to see is that the sentiment turns back into bullish, maybe see a buy, because we'll see a buy signal if it's ready to go up. Kind of like how if you look over here on February 2nd, you'll see right here where it says it was time to buy. That was the time to get into target on February 2nd. All right. So we need to see another one like that. And what typically happens, again, this is a cool thing because, you know, the market goes up, it goes down, goes up, goes down, goes up, goes down. Most people don't realize, like, when these down or pullbacks are taking place, how do we identify that? How do we know when the pullbacks are over? One of the ways to do that, and one of the ways we use this, is like when we see a green background and then it turns red, it goes all the way there, red, and then it turns green again. And so in the case of when it turns green again, kind of like how it did right here, notice we didn't have a buy signal. It just said long stop. So place your stops. You would have been stopped out the very next day if you got in. But again, because it didn't say buy, you should not have been jumping in. But then when it pulled back decently enough, because again, we had a higher high, higher low, then we higher high, higher low. How do you know when it's ready to go back into effect to go higher again? Then you'll see the sentiment will turn into a bullish sentiment, and then you'll see a buy directive. So today's directive on that day should show you a buy cover, meaning that it's time to buy, it's time to cover all your shorts. And then that's when you know, okay, yes, the next wave up is about to take place. For those who are using Elliott wave, like Michael, my previous colleague that was speaking before me, he loves using Elliott wave. This is one of those good ways to visually see, okay, the up and downs, up and I'm not sure, but when it is ready to start heading back up again, who asked this question, by the way, Michael, when it's ready to go back up again, you'll see the sentiment turn into a bullish sentiment, and then it'll be a buy cover signal. Okay, but until then, I'll say no. And as you can see too, the gauge right here is telling us to sell. We should not be in target at this point trying to buy. What we want to see is for the needle to come all the way down to the bottom. That would be even great. So when it goes down to the bottom, and then this will all change into green again, we'll be ready to go higher. But for now, I'll say hold off on trying to buy anything on target. Take your profits if you already have some profits on there. All right. Oracle is the next one. If we go over here to Oracle, and again, I'm having internet issues. Okay, so just please let me know in the chat box if you're having internet issues, because I don't know what's going on here, but I'm seeing that I'm having delays on my internet anyways. So here's the thing. Oracle is gearing up. It's not there yet. So you can see that the sentiment is still bearish. So we just look at this. This is where we look at the sentiment, and the sentiment is telling us that it's still bearish. And it's also color coded to make it very easy. You know, if it's red, that sentiment is bearish. However, we're getting to the point where there's a potential that this start heading up. And the reason why I say there's a potential that it could start heading up is because the gauge is turning bullish. It's like at the bottom and it's like beginning to go up. We're looking to see if it's time to start buying. But in order for us to buy, we want to see the sentiment turn bullish, and we also want to see the directive for that day tell us that it's a buy signal or buy cover signal. So I would say definitely watch this literally every day. Like literally every day this week. What's today? Today, Tuesday or Wednesday? Today's Tuesday. Okay. Is it today? Yeah, today's Tuesday, right? So today's Tuesday. I would definitely want to watch this week. You know, I won't want us to start jumping in just yet, only because what we don't want is for something like how this went up and then it kind of like went against us again. So what we will want to do is make sure that, you know, this sentiment does turn bullish, but chances are if Oracle starts creeping higher, do not be surprised, because one of the big thing is switching over to the weekly time frame. It has come down significantly, like significantly, to the point that it is sitting in an area where it is not unreasonable for Oracle to start heading higher again. And one of the things I like is notice how the needle on the weekly time frame is like it is at the bottom. And so I actually posted something on social media this week and say, hey, pay attention to Oracle because it is now at the bottom. Okay, it is. So now it's just a matter of waiting to see when it is getting ready to start becoming healthy. So I told people, I said, look, the only difference now is what we don't want is just because it's at the bottom doesn't mean it can't go lower. We understand that. But the cool thing is like, it's let us know we are at the bottom, but the sentiment is still bearish. Things are beginning to change. Let's wait and see. And so right now, even on the weekly, so look, just wait and hold, just wait until things get better. And then on this daily time frame, this is where we're going to start watching. And right now, say exit your long positions, put some stops and stops on your short positions right now. So we're not ready to start buying. But just from what I'm seeing here, the fact that the daily time frame gauge is beginning to turn bullish, chances are we're going to start seeing things turn bullish very, very soon on Oracle. And because of the fact that on the weekly time frame, we are literally at the bottom of this, this would be something to really, really pay attention to. And I'm talking about long term. Okay, so not just even short term. Oracle could do well from here on out once we get that confirmation that we're looking for. What is the confirmation we're looking for? Definitely, we want to see more higher prices. But if you're using the right side trading.io software, then it's just a matter of checking it literally every day at the end of the day. So it's not like you have to be staring at a computer all day. Just go back in and just check. You can do this on your phone if you need to. You could be doing it while you're at the, at the gas station, just trying to check and see what's going on, and you'll be able to know what to do. All right. So I hope that answers Oracle. So that's one that we actually in our community is that we are definitely watching for. Again, I just want to make sure that it is ready to go high. And then the other thing too is we like to look at seasonality too as well. And so here's a seasonality chart of Oracle. And one of the things we try to do is we try to figure out where are the key trends of when a stock is ready to go up, meaning that when are the two biggest times of the year where they have a good chance of going higher. Okay. I usually call it usually the bottoms for the year. And so sometimes there's only one bottom, sometimes there's two bottoms that they might have, but like when do they usually bottom? And you can see here, this right here is letting us know these are the key trends. So we base this off of the key trend. This is when Oracle tends to bottom in the month of March. So sometime between March and April, Oracle tends to bottom. So is it coincidence, that the weekly time frame is now bottoming? And the reason why I keep on saying weekly because when a weekly chart, when a stock bottoms on the weekly chart, it takes a while. It rallies for a period of time. Does that make sense? So to me, this is setting up as a stock that is gearing up for a significant rally, and we can see here once it bottoms, especially after April, this thing just takes off from there. And so this is why I'm saying, hey, pay attention. We usually get the first bottom somewhere around March 8th. And then we start seeing it really, really take off after April. Okay, so for those of you guys who are a little bit more swing traders or long-term traders, if you're trying to think about, looking into the future, Oracle would definitely be one that you want to pay attention to. The other thing we do is I like looking at this called future trend, and what this future trend kind of we already know that it bottoms in March, April, but then after that, when is it a good time for short-term trades, right? Where we can jump in, maybe not necessarily looking at a longer period of time, but it's like we can easily jump in and jump out of it. Okay. And then this is where this will tell us that sometime in May is when this will take place. So sometime in May and also sometime in June will be two times to pay attention to Oracle. And one of the cool things about this too is I can put this on my watch list just very quickly by just clicking on this, and then I can add this to my watch list. And once it adds this to my watch list, you'll see added to the month of May. I have a watch list that you can then click over here, and then in the month of May, you'll see that Oracle will be on that list. I can expand this right here. So here we are. These are 3 stocks that moves in the month of May. Okay, so it's very cool. And this is how we kind of just make sure that we are able to kind of just wait and start building our list for each and every month and see where we can jump in when we want to. All right, Roger is asking for BJ Wholesales. Let's go to BJ Wholesales right here. Let's go to the home tab, the price, daily time frame. Let's take a look at this. All right. So here's one that is now beginning to show signs that it might be getting ready to go higher. So looking at this right here, we have higher highs, higher lows, right? Higher highs, higher lows. And then this is where I said, hey, we want to start seeing things go higher. Now, I understand that today was, a pretty messed up day for the market and all that kind of stuff. But one of the cool things is, like, as of yesterday, this is exactly what we talked about, where before it was saying, hey, place your stops and all that stuff. Now it's telling us, hey, BJ's is ready to start heading higher. Okay. So I don't know how it's doing today. Let's take a look and see how it's actually doing today. I'm not sure. Does anybody know how BJ is doing today so far? Anybody knows? I wouldn't be surprised if it's actually doing okay. If it's not, okay. So let me see here. Give me a second. Let's bring this over here. Okay, so it is doing fine today, as expected. Okay, and so we can see this now. Higher highs, higher lows, higher highs, higher lows, and then getting ready to do what? Making new higher highs. So my expectation is that BJ's will be a stock that will probably make it to new higher highs. So be expecting of that. Now, one of the things I also try to do, as far as like trying to anticipate where the target might be, is I'll click on this thing called Harp Line. And this Harp Line allows us to kind of have an idea. What it does is every market moves in waves and moves in channels, so to speak. And so what we did was we calculated, like, okay, over a certain period of time, are we able to take all the price data and condense it into a channel? No matter how wide it moves and everything, can we put it in a channel? And so what you'll see here is, again, goes down, goes up, comes down, goes up, comes down, and then is ready to go up. And the idea is, because this is a channel, chances are that we'll make new all-time new highs. And in the process of us making new highs, this Harp line gives us an idea of where we can anticipate our target to be. So if I scroll down over here and I look at this right here, I am seeing $104 for the upper band. So $104. So my expected target for BJ wholesale would be $104.90. Okay. And typically we give it about anywhere from 2 weeks to 4 weeks to get there. And so I would say by the end of this month, I won't be surprised if BJ wholesales reaches $104.90. Does that make sense? And so that's another cool thing to kind of help us with our analysis, just to make sure that we are prepared for what is about to take place. And then we can look over here in the weekly time frame. This is kind of interesting because, it's been beaten up pretty bad. Then it started trying to head higher. And from what I'm seeing here, the sentiment is bullish. And, even though saying long stop, exit short, this would be just make sure you have stops in place, just so that way you don't have it go against you. But this daily chart to me is showing me that this is a stock that is ready to go higher. Okay. All right. Any questions on this one? All right, what other stocks do you guys have? We can take a look at any of the stocks that you guys have. I do remember, I'm not sure, I think it was Michael, my colleague that was presenting earlier. He talked about this stock right here, GILT, okay? And I was looking at this stock, on the daily time frame, we can see that, it is right now, it's showing us that it's a wait and hold. It's overextended because, you can see now that the gauge is risky. But then I went to the weekly time frame and I was like, oh, wow, this is really cool. If you look at this on the weekly time frame, this is a stock that is, it has the ability to continue going higher for sure. But you have to have the patience. Does that make sense? Let me zoom out a little bit. So if we look at this right here, and again, typical classic, I say this all the time, market comes, does this, double bottom, right? So that was your double bottom to let you know that this was a stock ready to go higher. Then it did a higher high, higher low, higher high, higher low. Well, what do you think I expected to do going forward? Higher high again, all right? And so if I say, okay, well, where could the target be? I can come down here. Is it $20.32 is where I could expect that to be, or I can click up on Harp right here. And I can say, okay, now that it's taken this and it's seen, it's try to contain it in a channel based on the movement, the historical movement of this stock could reach $20 and whatever cents it said over there, which was what? $20.32. Okay, $20.32. And so not sure why my internet is acting up
Nope.
today.
Yeah, Wally, are you there? Wally, can you hear me?
Can you guys hear me now? It seems like I was kicked out. Sorry
Hey,
about that.
Wally. Yeah, can you
Yeah.
hear me?
Yeah, I can hear you now.
Yeah, you cut out for a minute, but yeah, I can hear you now.
Okay. All right, thank you. Okay, so yeah, I apologize. I am at a hotel. We are traveling, and so I'm at a hotel, and I'm not sure why the internet is not working. It was working fine earlier, but then now all of a sudden, it started giving me issues and stuff like that. I'm not sure what the last thing you heard me say was, but all I'm saying is that this stock looks like it's getting ready to go higher. So it might struggle a little bit, but long term, I believe that it has the ability to continue going higher. Looking at this from a weekly time frame point of view. Okay. All right. Arif also asked for, if I'm pronouncing that properly, please forgive me if I'm not. Arif asked for this stock right here. Which is Ship Finance International. So from the daily time frame, you can see what today's directive is telling us is to wait and hold. So the idea is that you should have already been in this way back when it first gave you a buy signal on January 28th. And if you'll notice, since January 28th, this just tells you to wait and hold. This is another thing that I tell people, like a lot of people don't understand how to tell when you should stay in the stock, when you should get out. But this one kind of gives you that, you know. So on this day, on February 5th, it says just place a stop. And whenever it says place a stop, you put a stop at the low. You don't get stopped out and everything looks good. Just wait and hold, 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 even up until yesterday, wait and hold. All right. But at the same time, I always tell people once you see that is that risky, even though you're making money, this is where you say, okay, now that is at the risky stage, you might want to consider taking some profits. Either that or you go to the weekly time frame and see if there's anything here on the weekly. And by golly, look at what the weekly is telling us too. It is like super risky. Take your profits. That's for you. So even though it's telling you to wait and hold, this part right here that's telling us that it's risky is like, look, just take your profits. Somebody trying to buy now, it's too late. I mean, now you're chasing the stock and you're trying to catch a running train. So you might get yourself, you know, not too excited about what happened. But again, January 5th was when you were supposed to be buying this. And if you had done that back in January 5th, you would have been just sitting fine. And now it would be time to take profit. So the goal is to go back and learn how to catch these up front. And we have scans to help you catch this stuff. So under my scans right here, you can go to buy cover right there. And once you do your buy cover, you can find stocks like these that are getting ready to go higher as opposed to the ones that are already ran away. And now it's telling you to just wait and hold. Fair enough. So to answer your question, Arif, I would say take profits is what you want to do. If you're looking to jump back into this, you want to wait till we have a decent pullback. Okay. Raju's asking for CPRT. Let's take a look at CPRT. Very good. Okay, so here's CPRT, and we can see here it's telling us to wait and hold is what this is telling us to do. The sentiment has turned bullish. It really didn't give us a buy signal. And usually when situations like that happen is because of like it ran away, like it just had really good moves and took off like that, right? And so again, this is where I say, okay, if you can't get it on the daily time frame, switch to the weekly and see if there's anything there. When I look over here on this weekly, yeah, you know, this is one of those where it's just So my thing would be, as far as this stock is concerned, it's like, you know what? It still has room to go higher. And how do I know it still has room to go higher? Because we haven't hit the top yet. We're not at the risky stage yet. So it definitely has room to go higher. But the fact that it took off so much like this to the point that it didn't even stop to let you in a sense, it's like, okay, maybe we should just hold off on this or go find something else. But if I was in your situation, okay, I would and I was like, I'm adamant about getting into this. What the directive is telling us today is to do what? Is that if you do go long, make sure you do what? Have a stop in place. Okay. So it didn't give us a buy signal because it ran away from us. It was too quick for us to catch. It didn't have no breaks in between. But at the same time, if you do, then just make sure you have a stop in place. Does that make sense? And so as long as you have that stop in place, then you should be fine. Over here, same thing. Is like, look, you can get insured, meaning that you have stops in place, or just stay out of it. But now it's telling you, okay, go ahead. You can still get in. Just make sure that you have your stops in place is what this one is telling us to do. I like the idea that it still has room to get to the top. So that's good news. I do not like the weekly because, the weekly still, has a lot that it needs to do. Okay. Maybe sometimes I like to look at the seasonality on something like this. Okay. So this seasonality is based on the future, meaning that on this is yesterday's, this dotted line is the current day, meaning as of yesterday's data. And then going forward, there's 2 times when we should pay attention to short-term moves to the upside. One is over here from March 12th to April 1st. So basically when I see that, I just look and say, hey, in the month of March, we're like literally a week away. So this might be that move that's beginning to take place. So that would make me say, let's still go ahead and do that. In fact, let me go ahead and add this to my watch list as well. And then the second time that this thing moves is in April. So April 4th to April 24th. Now you could stay in from March 12th to April 24th. Just know that there might be some type of pullback that you might experience and all that kind of stuff before it starts struggling to go back down. The other thing I might want to do is like, hey, when are the 2 biggest times that this stock usually bottoms and goes higher? And here we are. We see that sometimes September, October, November, this stock tends to bottom, and then it does it again February, March, April, right? So based on that information, this is telling me that historically, this stock tends to go up February, March, April, all right? And one of the big keys with seasonality, most people don't know when to start jumping in. I always say, look, if you know a stock is supposed to have a seasonal move, meaning that this is the season when it starts doing stuff, like 1-800-Flowers has a season of moving in February because of Valentine's, and H&R Block does well in April because of taxes, right? And so if you understand that, then hey, not a bad idea to pay attention to these type of stocks during those period of time. And so I would say just for that reason alone, I would be interested in this. And then what we do is we say, okay, when that period comes a week or 2 before that, if we can see any buy signal, that would be something we want to pay attention to. So I would say this could have the potential of going higher. All right. I got 2 more minutes, but let me talk about Ben on this list right here. So hopefully you guys can make the assessment based on everything that I've talked about now. We can see that this is red, which means that it is telling us that we should be doing what? Selling. The sentiment is bearish. It's telling us to exit our long positions. What does that tell us? It tells us that, hey, don't try to go in just yet because you might see that things might not turn out the way you wanted to turn out. If it is going to start heading higher, we'll see it. And the directive would change, the sentiment would change, and all that kind of stuff. But until then, it's like, yeah, you might not want to do that. If we even look at the weekly time frame right now, it's telling us, hey, go ahead and put some stops on your positions. All right. Maybe I change into the seasonality, and I can see here that now is not the time that this stock tends to bottom. It bottoms in October, it bottoms in June. But maybe we can see some short-term trends for it to go higher. And right now, short-term trends right now is not even showing that it's going higher, it's showing lower. The earliest we can start seeing this thing trying to really make its way higher is in May. All right. So for that reason and all the other stuff we've seen, I'll say this is not a stock that I will want to jump into right now. I'll go see if I can find something else. All right. If anybody wants to follow us, because I know I only got 1 minute left, we do have this special offer. So if you go to rightside trading.com/97, oh, come on, rightsidetrading.com/97, right? I am doing an offer right now where you guys can join us. $97 for 1 month, $147 for 3 months, access to the software. You'll come to our Monday night webinars and also on Thursday night where we talk about how to use the platform. So it's like 2 times a week where you can come join us, and we'll go from there. But take advantage of that, ladies and gentlemen, and I'll see you on Thursday where we'll talk about the platform and how to use it to help you with your trading, and then on Monday to assess the market. All right. David, thank you so much. I'm going to turn it over to you.
All right. Thanks, Wally.
Welcome.
All right. Thank you to Wally Olopade of Right Side Trading for being here. And next up is Chris from Big Trends. Chris, are you there?
Hey, David. How are you? Can you hear me?
Yes. Sounds good.
All right.
Let's stop Wally share and
you need me to share here.
Yeah.
Let's see. Are we good there? Are we seeing the Thinkorswim platform?
Yes, looks good.
Okay. Well, we don't want to click that yet. All right. So you ready for me to get started like we did last time?
Yeah, I'm just double checking my setup here and everything looks good. So I'm going to start my recording and then you can start your analysis. So I am recording again now.
All right. Welcome, everyone. This is Chris Sayer with Big Trends. If you're not familiar with Big Trends, it was started by Price Headley in November of 1999. I was a client of Price's shortly after he launched Big Trends. Been with Price and his team over 14 years. I'm on the front line, interacting with traders just like yourself, doing presentations like these, doing some one-on-one coaching and mentoring as well. We're going to be talking about various different securities. You have something you want me to look at, throw it into the chat box there, and then we can discuss that. But right now we're looking at SPY, which is one of the largest ETFs out there. It tracks the S&P 500 index. If you're not familiar with that, you're going to see some indicators at the bottom of the chart there. The top one, this one here, is %R, stands for percent range. Created by Larry Williams. Larry used a negative scale. We use the %R indicator on the Thinkorswim platform that uses a positive scale. And then at the bottom, you see that we have ADX, which is the gray line. We have DMI minus, which is the red line. The green line is DMI plus. And the yellow line is just a midline, 25, just based off the research of that indicator. You're wanting to see some moves above that midline to confirm some trends there. Up at the top, each one of these bars, candles, if you will, is going to represent 1 day of trading action. And you're going to see, let me slide this over here. You're going to see various different %R signals on these securities as I pull them up today. So there's one that was actually wrong to go long SPY back on January 28th. You can see it got stopped out there on February 5th. But I mean, we'll be talking about that. It looks like somebody wants me to look at AUPH. So let's just jump right in. AUPH here. Looks like it's some type of pharmaceutical company. It's currently below the EMA, which is a 21 EMA there, the yellow line up here. It's currently on a short signal. Looks like they just had earnings on the 26th. So we had earnings there on AUPH. But right now, according to our %R signal, it is a short signal. I like that because it's below the 21 bar EMA as well. We do not have confirmation down here with the negative DMI indicator, which is the red indicator. You like to see it get above 25, as I was stating. It's inching up there. We like to use multiple indicators for just confirmation. We have found on our 26 plus years of experience, just using a single indicator by itself, you can get a lot of false signals and whipsaws and things like that. So right now, short signal was put in place on AUPH on February 6th and still sitting there based off %R. Let's see what else we got there. We've got LUMN. Let's throw that in there. I believe you say Lumen Technologies there. No signal currently on it based off %R. However, if you look down here at the bottom, we do have a DMI minus getting above that midline of 25 there. What day did that actually happen? That happened on the 23rd. That was Monday, I believe, of last week. Was the 23rd. If I'm wrong on that, somebody please correct me. I know the 18th was a Wednesday. So yeah, I believe Monday was the 23rd. So we're short there based off the DMI, but as you can see, we do not have a signal on %R. I wouldn't go long this particular name since it's below the 21 EMA there, exponential moving average. But when you add them all together, kind of in no man's land, but you see down here at the bottom, it tested %R trying to go below that 20 threshold oversold area yesterday, bouncing off of that today. So I would say no action right now. Are you currently long that stock, RS? I'm not going to say your name out there. I'm not for sure if everybody can see who's submitting those. Any other names? Okay, great. So you're long that. You must be a believer. Again, I'm just sharing you what we see. I'm not trying to talk you out of it or anything like that. You've got to do what's best for you in your financial situation. If you see over here on the left, I got a list of stocks that trade weekly options. If you're newer to options, those are options that expire every Friday. Some securities like SPY, QQQ have options that expire every day. Other names are starting to get into that daily options area. But these are definitely names that have options that expire every Friday. I sorted it by market cap. So that's why you see NVIDIA up here at the top. Currently on NVIDIA, again, we're looking at a daily chart. It went long here on the 24th before earnings. We don't trade names right prior to earnings announcement, so we ignored that signal there. Even though you had DMI plus above 25 and above the EMA, we just don't play that game. We don't play the game of getting in front of a name right before earnings. Good thing we didn't. It turned down on us. Right now, we're in no man's land, if you will, on NVIDIA. Yes, we're below the 21 EMA, but %R is not given a signal below that 20 threshold there. Yes, DMI plus is above the 25 line, but all of the variables have not come in play together, if you will. So NVIDIA just kind of sitting and waiting and seeing what happens with it. Here's Apple. Again, very similar situation, below the 21 EMA, DMI plus is above 25, but you see all this noise down here, all the chopping back and forth around that mid 25 line. To me, that's just a lot of indecision, and you see that in the upper part of the chart, right, with all the daily action. We're trend traders here, given the name Big Trends. We're looking for trends confirmed to the upside or to the downside, and we try to avoid the chop, if you will, as much as we can. That's why we use multiple indicators to confirm what we're looking to enter and when to exit. How about Alphabet? I'm going to take a look at it here. It's short. We got a short signal on %R on February 13th, right after the earnings announcement came out. You see it's below the 21 EMA. That's the yellow line on the upper part of the chart there. So %R went short on February 13th, the morning of. And then DMI minus actually told you to go short the morning or the day of the close of February 5th. But now that we've got all the signals lined up, then I would say definitely on the 13th of February, that Friday, to go short Alphabet. Again, not a recommendation to run out there and go do that. Just telling you what we see. All right, somebody's asking about Verizon. You're going to see some information on this chart when I pull it up. I have it as an investment in my 401k account. All right, full disclosure, I own Verizon as an investment. I'm not for sure what it looks like on the daily chart. On the daily chart, we're on a long signal here. %R told you to go long on February 4th. We got the DMI going above, plus going above 25 right here on the earnings announcement. And of course, it's above the 21 EMA. So again, full disclosure, you can see various different entry points that I have there with the lines on it, but it is not a trade for me. It's an investment. So I have a mixture of money. I trade and I invest. And full disclosure, again, I am long Verizon from an investment standpoint. Let's look at Microsoft until somebody else shoots another name in there. Microsoft went short on the morning of February 4th based off percent R, but you can see we got some whipsaw action with the DMI minus line going all the way back to about the early part of November. We did get a little slight bump here off the earnings. When was that? About the end of January. But then after earnings came out, it's been trending downwardly below that 21 EMA. You got the DMI line. And then nobody's asked, but this gray line is ADX. And that stands for Average Directional Index. And you're looking for that to confirm the trend. So the trend's been showing, it's been going in an upward direction, confirming the down move that we're seeing. You see percent R staying below that oversold 20 level. And then the DMI minus has been staying above 25, but it's been rolling over just like the ADX. So maybe Microsoft is putting in a bottom here. We don't try to call absolute bottoms or absolute tops. Again, we let the indicators tell us how to act to get in and to get out. How about Amazon? It was on a short signal, but you can see here on the 26, it closed that short out based off the percent R signal. Now, if we get a couple more closes below this 20 threshold on percent R, we still have got DMI minus above the midline. We're still below the 21 EMA. It would definitely throw another buy signal or another short signal on Amazon there. Please do not hesitate to throw any names into the chat box. I'll be glad to look at them for you. Taiwan Semi, it was on a buy signal with percent R as of the morning of February 9th. You see it's been riding this trend up and down. Now, people ask me, being on the front lines here at Big Trends, do you have a favorite indicator? And the answer is yes. If I had to pick one and only one, I'm going to use ADX, DMI plus and minus. It is my favorite indicator if I have to pick one. But as you can see, and as I told you earlier, we don't use just a single indicator here at Big Trends. But percent R was getting whipped, as you can see, as we move up this chart. But it has been long Taiwan Semi as of the morning of February 9th. Depending on what happens today and tomorrow, that percent R signal may come off. You do see DMI minus going above DMI plus and being above the 25 midline there. And you definitely see today with the gap down below that 21 EMA. So Taiwan Semi is in make or break area, whether to close that position out from a long side. We'll probably give it one more day. If I was holding it long, give it one more day to see what the charts actually tell me. Meta, here's a name that should be very popular with a lot of people. See a lot of choppiness down here, just snaking back and forth, if you will, with DMI plus and minus. Again, the plus is the green, the minus is the red, and the ADX indicator is gray. And you can see ADX has just been kind of trending in a downward direction, following Meta, what Meta is doing. But if it was a true down move, that ADX would actually be rising. Okay, it's just a confirming of the trend. So right now, Meta's kind of in a no man's land. We're dancing around with the 21 EMA. You see percent R there in the middle. So no action there. Somebody wants me to take a look at the name Ben. I think you all were looking at that right before I came on the air. It was on a long signal, but it's been closed out based off percent R. Let's see when that long signal went into place. It went into place on January 7th, got closed out yesterday at the open for a positive percent R signal there. You see DMI plus staying well above the 25 midline. But as I was just talking about with Meta, you see here on this ADX line, starting on about February 11th, it's starting to roll over and go in a downward direction, which means stalling momentum, even though the green DMI plus line is above the DMI minus. Okay, so you got to use all of these together. Again, that's why we don't rely just on a single indicator. Got a few more names. I really appreciate you all throwing these names in there to take a look at them. Corning Glass, name that we're familiar with. They make the Apple iPhone glass in a town not too far away from here. Again, we're based in Lexington, Kentucky. Over in Harrodsburg, Kentucky is where they make the glass for the iPhone. Pretty cool. My youngest daughter did a internship there for a couple summers. She said it was pretty fascinating. So we're on a long signal as of the morning of February 3rd off %R. Again, you see DMI plus above the midline. You see this gray ADX line just keep trending higher. It is trying to roll over just a little bit, but not to, in my opinion, not to a point to be super concerned. We're still above the 21 EMA there. So I would stay long this. If you're long it, I would not recommend buying it here. So it's not a buy recommendation. So let's call it a hold, if you will. Walmart, let's take a look at Walmart. Was on a long signal as of February 4th, closed it out on February 19th. You see %R down here at the bottom of the chart. In the mid range, we're not above 80, we're not below 20. You see the DMI lines, you see ADX rolling over. As I've been teaching you, see how this ADX line is rolling over here. You see that with the stalling momentum in Walmart. All right, what else we got? Somebody wants to look at Netflix. Let's see what we got here. It's one that I have on my watch list. I'm curious to see what's happening. It's been in the news lately with that called off merger. I don't know if you all have been following that or not. That's why it popped a couple days ago on that. So you can see as of this morning, %R gave it a buy signal at the open this morning. You see the %R above the 80 level there. For a couple days, you see DMI plus, which is this green line here at the bottom, getting above the midline. And you see how ADX is trending in an upward direction. It's confirming that we've got an up move there. And again, this yellow line up in the upper part of the chart is the 21 EMA. So we have all the names there. So again, it's not a recommendation to go buy Netflix, but everything's looking good for Netflix based off what we do. All right. Anybody got any other names you'd like to share with me here? Love when you all throw these names up here. What was the last name I looked at? Microsoft. How about Amazon? No man's land there on Amazon. We looked at Taiwan. We looked at Meta. How about Broadcom? It's got earnings coming up. Even though it's in no man's land, you do see DMI minus has been above the midline for a good while now, right? Even as it was picking up this action below the 21 EMA. We did go short %R here on January 21st. That was a Wednesday. How do I know that? That happened to be my birthday. Dad joke there for you. And then it closed out that short on February 9th. So we wouldn't get a new short signal unless we got %R below 20 for a couple days off the %R reading, but it is negative based off the DMI minus and being below that 21 EMA. CPRT, Copart. That's an auto parts, right? That's an auto parts. So this is Copart. It was on a short signal, closed it out on the 27th. Someone is asking, so the indicator that you're seeing on the bars, on the candles, okay, that is based off %R and %R only. And %R stands for % range. On the Thinkorswim platform, which is what I'm using, they list it two ways. They list it Williams R. They list it Williams R, okay, because Larry Williams was the creator of the indicator, but that uses the negative scale. And then they also have it as %R, which again stands for % range. You can see that down there in blue on that box. It says %R. And we like it because it uses the positive scale 0 to 100. So based off just %R alone, it's on it was closed out on a short 2 trading days ago. But you see the DMI minus above the 25 here, right? But now that you see that Copart has climbed above the 21 EMA for the last 3 trading sessions, if today's action holds, I'd say we're in no man's land right now. We're just waiting to get confirmation of all the indicators. So to go long, you would need the DMI plus to get above minus. You'd like to see that ADX flip a little bit. And of course, you'd like to see %R get above 80 for a couple sessions and give that confirmation as well. Again, please submit names. I'm going to share one here with you that's super popular. That's Tesla. That's Tesla. Went short on Tesla on January 21st or on January 20th. That was a Tuesday, closed it out on February 10th. Again, those two signals are just based off percent R, but look how long the DMI minus has been picking up this short trend in Tesla. The first reading above 25 came on January 2nd, so to start the new year, and it's been following that, and you see the yellow EMA. Tesla's popped above it a couple days here consecutively on the 22nd and 23rd. Tried it here on the 11th and on the 12th, failed on the 12th, tried it again on the 25th, and it's been straight down ever since. And you see percent R down here. So yesterday's percent R reading was 24.3287. Today we're at 10 points, let's call it 3. You see it bouncing around. If we get another percent R reading below 20 tomorrow, and we take out this action, that close, then it will give another short signal on Tesla. All right. Somebody's asking about the name of the top indicator and how it works. Again, that's just percent R, stands for percent range. And that information on the charts up here at the top is only based off the percent R indicator. Don't have a indicator showing you all three acting simultaneously. All right, we looked at Walmart. How about Lilly? Eli Lilly. Looks like it was on a short and then closed out the very next day. Look at all this choppy action down here at the bottom. Again, this is why we like multiple indicators and not just one. You see all the choppy action with the DMI plus and minus going back and forth. I mean, even percent R has been choppy here. So if you're just trading percent R, you see the whipsaws. You go short here, you get out, you go short here, you get out the next day. It's flirting with the 21 EMA. Again, we like confirmed trends. This one is very, very noisy. JP Morgan, been in the news for several different things over the past few days on it. No real action on it. You do see DMI minus down there, the red indicator being well above 25. You do see it's below the 21 EMA, but it's been knocking off of it, right? It tested, it fails, it tested, it fails. Percent R, it went below it on the 23rd, and then on the 24th it went below it as well. But it was a green bar, closed out, so it didn't fire a signal there on percent R. Any more names? Please don't be bashful. I've got a few more minutes if I'm keeping up correctly. All right, we looked at SPY, IVV, track SPY as well. ExxonMobil went long yesterday morning, ExxonMobil, but here's a nice long signal on ExxonMobil, just off percent R on January 14th, got in, closed out on February 18th, as you can see there. But look how long this DMI plus has been picking up the signal. You see riding above the 21 EMA. You do see a failed signal here just on percent R. December 30th, get in, get out on January 8th. Again, that's why we don't just trade one indicator. Someone's asking me to show favorites that you're currently watching, please. Not going to do that. I'm going to go over these names that are highly traded. I do appreciate the question, but not going to do that. Don't want to give any false indication of guiding you into what may work for you in your financial situation, but I do appreciate your question and do appreciate you attending. Let me throw in AGNC, I believe it is here. What do we got? This is a REIT. Flashed a short signal this morning based off percent R. You can see the last percent R signal was a long signal picked up on December 22nd, closed out on February 3rd. It did fire a percent R short signal this morning. You see that we got a bump above 25 the day before, and we're definitely below the 21 EMA. Michael's asking for NVIDIA. Let's go back up to the top. We reviewed this one earlier. Let's look at it again. So NVIDIA, you see, has been chopping back and forth down here at the very bottom with the ADX plus and minus. But what I want you to notice is this ADX gray line is starting to turn in an upward direction. Again, that doesn't mean NVIDIA is going up. what that's telling you is it's starting to confirm this downward trend based off ADX and DMI minus going above 25. So it's starting to confirm that downward trend. No signal on percent R. It actually went long a day or two right before earnings and closed it out afterwards. Again, we wouldn't have entered that trade, a day or two before earnings. Okay. APA, I believe that's what, Apache maybe, or used to be called Apache. I think they've changed their name to APA Corp now. Went long yesterday morning on that one. You see how ADX, the gray line, is turning up here. You see DMI plus definitely staying above it, catching this upward movement. Percent R flirting. Went long on February 12th, out on February 26th, and then went long again yesterday morning. Folks, this is not a recommendation to go buy APA. I'm just sharing what I'm seeing. So please always trade with what fits in your financial situation. Somebody's asking about Palantir. It's a name we follow here at Big Trends. You can see that it's coming out of the oversold area on percent R. Went short percent R on January 21st. Again, that was a Wednesday. You see DMI minus is above 25. It's below the 21 EMA, but the last two sessions were above the 21 EMA, right? You see percent R coming out of this oversold area, and you see the green DMI line going above the red and above the 25 midline, and you're seeing ADX roll over. So based off all of that, I would get out of the short that fired percent R signal on January 21st. On percent R alone as a single indicator, it hasn't closed it out. I'm guessing it will close it out tomorrow morning, but please don't hold me to that. I'm just telling you what I'm seeing based off the action that we're observing right now. What other names y'all want to look at? Let's see what we got here. What we look at. We looked at ExxonMobil right before those. I believe that's correct. Yes, we did. Visa closed out a short on percent R a few days ago. You see the ADX starting to roll over down here. Again, it's that gray line. You see the DMI minus rolling below the 25, and we're, percent R closed out. So he had a lot of reasons to close down and get out of that trade on Visa. Excuse me there. Johnson & Johnson, look at this monster move here. Based off percent R alone, it's been long since January 15th, okay? Still long based off percent R. Look down here at the bottom. Look at the green DMI plus line. You do see ADX starting to roll over here a little bit. What is that? February 19th. And you also see that Johnson & Johnson has been kind of chopping sideways, right? Kind of chopping sideways. All right, David is telling me that we've got 2 minutes. So let me do something for you here. So to thank you for attending today's session, I'm going to do something special for you. Again, my name is Chris Sayer, the lead consultant at Big Trends. Big Trends was founded and started by Price Headley in November of 1999. So we've been around for 26 years. As I told you all earlier, I was a client of Price's shortly after he started Big Trends, but I've been a part of Price's team for over 14 years now. So what do I have for you? If you're one of the first 100 traders to act, then you can get access to a very exclusive coaching series. We call it Technical Analysis Techniques. It's 10 sessions of video training. All right. Percent range, percent R, as we've talked about. Other indicators that our team looks at, Big Trends bands, acceleration bands. That's Price Headley's proprietary indicator, commodity channel index, DMI, and ADX. We were talking about those today. The Donchian channels, we were looking at a 21 exponential moving average there, stochastics, RSI. You can read all that. You'll get access to a dedicated email address to the analyst team for any questions. It should say Price's team there, so I apologize. Unlimited access to the sessions from any device. All of these videos are HD, high definition videos, and you can get access to each slide that you can download and print from these. We make a link available to that. How do you take advantage of it? Well, first of all, let me put some pricing perspective on it for you. So $197 for each session. That's $1,970, but we're marking that out today because the first 100 traders get it for free. You heard me correctly. We're getting it for free when you go to TimingResearch.com/big trends. I believe David has put that in there. Yes, you have. Someone said, great analysis, Chris. Thank you very much. It's very kind of you. I appreciate that. So listen, free, big trends. Come join our community. We're not asking you to spend any money today. We want you to come check us out. Price Headley, again, our founder and CEO, he's giving you this access for free, and you get to keep those videos forever. There's not a time limit on them, right? You're going to get access to those 10 videos in your Big Trends account. You go to that page, you'll get a welcome email. If you have any questions, I'm going to put the information in how to contact us. Our office hours are Monday through Friday, 9 a.m. until 5:30 p.m. Eastern time. Market's closed, we're closed. All right, I'm at my time, David. I'm going to let you go.
All right. Thanks, Chris.
Thank you.
Yeah, great analysis. And that is, yeah, a great bonus for everyone. So be sure to click that link and check out that free course there. So
Thank you.
all right. Thanks, Chris. All right. So next up is Erik Gebhard of AYT223.com. Erik, are you there?
I am.
Okay, great.
You know what?
Yeah, so go ahead and share your screen and get set up.
Okay. Are you able to hear me okay? Because I'm having a echo effect. Does that mean I'm logged in twice or something?
Oh, yeah. Yeah, you are in the room twice. Do you have two separate computers logged in or
I might have logged in
a
with the browser
phone or
and
something?
yeah, let me do this.
I could try.
There we go. I fixed it.
Okay.
Okay. I think you should see me logged in just once now, hopefully, if I did it right.
It's still showing both, but did that go disappear?
Yeah, there's no echo, so I guess if it's
Okay,
okay
so
with you, it's
maybe
okay
it
with
just-
me.
Yeah. Yeah. Maybe it just takes a minute to show you as logged out on the other one.
Okay.
Oh. You should be able to share your screen now and get set up.
Okay. Are we looking okay?
Yeah, looks good. All right. I'm going to start my recording again, and then you can start your analysis.
All right, great.
So I'm recording again now.
Okay. Welcome, everyone. Thanks for having me, David and Anka. And yeah, I've been peeking into some of the other presenters. It's always fun and actually informative to get information from all different angles. And I'm going to do something a little bit different. And before I get started, go ahead and just be sure to take a moment and look at the risk disclosure here. That's from our website. We are altivest.com. We're an introducing brokerage firm. We specialize in futures and options trading. And we do a lot of work in options. We have proprietary software for options trading. And we'll show you a little bit of that and a few other things and how we sort of take the opposite end of a lot of, trading that you might otherwise be doing. And I'll show you what I mean by that in just a second. But just keep in mind, there's always risk of loss when you're trading. So past performance is never a guarantee of future results, and that only risk capital should be used when trading. All right, so with that out of the way, what I want to do is just kind of really look at a couple charts very simply, and primarily we're going to look at the E-mini, S&P 500, NASDAQ 100, and Russell 2000, just to illustrate sort of what we do and how we approach things. And what I mean by that is we often look for where the market is not going as opposed to where it is going. And of course, we're always, myself included, we always want to try to pick the big moves on a particular ticker, whether it's a short position or long position. and you make a killing, of course, on a big move. And there's nothing wrong with that, but those types of things are maybe, let's say, lower probability outcome. And so what we like to do is perhaps look at things and simplify. And in particular, we're looking at the indexes on the E-minis. And the reason why is because those tend to be much less volatile than an individual ticker, and they can be range bound, and they can trade within a wide range, much more so than a individual ticker trading in a much wider range. So, a big move in the S&P might be 2% on any given day. And meanwhile, you've got a lot of tickers making those types of moves, sometimes 20% in a day, even large cap, look at Oracle and stuff like that, Meta having these huge moves at times, or Tesla and whatnot. So we like to look at things that maybe have, I guess you could say, less volatility and also liquidity. And that's why we like the E-minis. They're some of the largest traded markets in the world. If you're not familiar with the E-mini family, you should take a look for yourself. But that's the way you get the execution with the depth and liquidity in these markets. So this here is a graph of the E-mini S&P 500. If you're not familiar, it's going to trade exactly correlated with the SPX and SPY in terms of the movement, and the correlation there would be 99.9% correlated. They're all just derivatives of one another. And for example, I'm looking at the RSI indicator, the relative strength indicator. It's a very simple indicator to use, at least I think it is. And the calculation is actually quite simple too behind it. But essentially, what you're looking at here, the way you traditionally look at it, is when it gets above the 70 area, the market's considered overbought, or below 30, it's considered oversold. And that's fine. You can look at it that way, but I also like to look at it really more in relation to the price chart itself. And I just have a couple of examples here on this E-mini S&P 500 chart. And then you'll notice also I have Bollinger Bands here. So I believe this is just the standard Bollinger Band, the default setting, where you have a 2 standard deviation band above the market and 2 standard deviation band below the market. So what that means is 75% approximately of the price movement will occur within those 2 bands. And then I think the middle here is a 21-day moving average, I believe. That's the default setting on that. But in any case, so what I like to do is, you can see here the RSI indicator was overbought and then started to pull back, and then it dropped back down to just what you might call no man's land or neutral territory. But meanwhile, you can see the price action. You went from when it was overbought, and sure enough, it did pull back a little bit here, but then it kept moving higher and higher. And then it made a new high here, but look at the RSI did not follow. So that's what you call divergence. In this case, you would look at that and say that could be bearish divergence. And you might look at that as a way to suggest a change in trend. I don't necessarily think it's a good idea to look at something like that, especially on its own in a vacuum, and claim that there's going to be a big sell-off. Of course, there happened to have been one right here, but nonetheless, I think you want to look at these as more of an indicator of a change in trend or maybe consolidation occurring. Don't try to jump in too quickly and think, this signal says it's got to drop or it's got to rally. It never really works that easily when we're doing these things. But, notice here too, you see the RSI at this level here. I drew a line here, and then you see prices here after that big fall. And then the market recovers and starts to make a new high again, but the RSI doesn't follow. It should be making a new high. It should be up here along with this new high if it were confirming the strength in the market, but it's not. So you get some more bearish divergence here. And again, indicator that there may be a change in trend or consolidation. And in this case, you see, actually, it did sell off quite a bit. So that signal worked quite well, more than just consolidation. But you get another signal like here. You have this price here, pulls back, makes another high, and then meanwhile the RSI doesn't follow, and rally higher than this prior high here. So these are kind of things we like to look at. And then meanwhile, since then, you see just a lot of chop bucket action here, a lot of consolidation. And, the VIX was, I think, below 20 for quite a while back in here. And, of course, today it's not. But nonetheless, you can see you're in consolidation, you're going sideways. And so what do you do about that? What kind of trade would you make in this environment? These are just daily charts, by the way. So we're not trying to really catch these highs and lows or lows and highs or anything like that in this particular case. We're trying to look at maybe periods of time where there's some consolidation and what kind of strategies can you use. And so what I want to show you is our Theta Trader software that we developed a while back. It's proprietary to us, and it uses an algorithm to develop option trades that we can apply to these types of scenarios where maybe you're looking at more of a non-directional or market neutral approach. And you might think, well, look at these big moves down and up and down. Yeah, when you look at it this way, without any broader context, these do appear to be sizable moves. But in some of the strategies we're using, you have a really wide margin of error. So let me show you what I'm talking about. So this is our Theta Trader dashboard, and this is just a demo account I use. I won't go into all the details. We have other webinars for a deeper dive into Theta Trader, but you can see these are open short positions here on the dashboard, or any open long positions. And these are option spreads, again, on the E-mini markets. And there are bullish strategies and bearish and neutral. And these are all pre-generated by our algorithm. And we kind of looked at this, that last chart as an idea for maybe what might be a non-directional type of strategy. And we'll go ahead and we'll just pick one of these here. There's a dragonfly strategy. That's a proprietary strategy we created some years back. And what you want to do here, maybe I can zoom in on this chart. And excuse my voice, folks. I'm a little congested just yesterday morning. One of those things, too many, kids and teenagers around with, colds and things. So we're bound to catch these things. But anyway, so you can see here, this is the June S&P 500 E-mini contract that we're looking at. And you see all the activity here, and here's where the market is now. Here's the expiration date on this trade in the future. But you're looking to trade these calls above the market and these puts below the market. So you're selling 6,250 puts below the market and 7,300 calls above the market. So you have this very wide range here, or this margin of error, let's call it. And you buy calls and you buy puts as protection to hedge yourself so that you're not naked. These are not naked strategies. And the idea is you collect premium, you collect net premium on the calls and on the puts, and you're looking for the market to stay within this range, essentially between these red lines. And here's kind of what it looks like on a table in terms of you got 31 days till expiration, your maximum risk, call risk, cash required, commissions, profit targets, all these things. But here I want to focus on this real quickly. So you can see your cash required about $4,700. Your maximum profit potential is 263. Well, people will ask, why am I allocating $4,700 to make a maximum of 263? And the idea would be that the algorithm has chosen these particular puts to sell and these particular calls to sell, and they have a higher probability of actually expiring out of the money. In fact, the 9.36% delta says this put that's being sold has over a 90% probability of expiring out of the money, and you're selling it to someone else, a quantity of 4 of them, I should say. And then you're also selling 4 calls, and those have over a 96% probability, or 94% probability of expiring out of the money. So these are these higher probability outcomes that we like. And you can see the algorithm has chosen the value you're trying to get, just about 7 points for this trade. So you're collecting the premium, and you can do 1 of them or 2 of them or whatever your cash, required would allow you to do. And then you just place the order, and it's just that simple. In a demo account, it just shows up as being filled. So that's kind of how we like to look at opportunities for non-directional strategies. And let me go back here. Here's the NASDAQ. I think there's something similar here. Yeah, looking back in time, you see the NASDAQ right here. It pulled back a little bit. So did the RSI, which is fine. And then you got this rally, but then the RSI doesn't follow. So you think, that's going to make me scratch my head, at least make me think that I don't want to jump in and buy right there. Perhaps you have other indicators too you could look at, but sure enough, you get this big sell-off. And then, it starts to rally again, but this is interesting too. We're up here at these highs, but you look at the RSI and it is not making a new high compared to where it was here. So you have, again, some more bearish divergence, and it can happen as well with bullish divergence on the downside. It's just not showing itself here on this chart. But again, you're staying within this range subsequently. For the NASDAQ, this was kind of a bit of a relatively quiet period, although some of these moves, if you're in them, don't always feel quiet, if you're in them the wrong way in particular. But so again, what could you do with this information, or how could you do something on a non-directional basis? And that's what we like to do when we look at theta trader and these types of non-directional strategies, like a dragonfly or an iron condor. And here's an example. We have a trade simulator. You can go back in time, and this is from December 30th. This happens to be a dragonfly trade. And let me squeeze this down so you can see more of the screen. So as day by day goes by, you can go all the way to the end if you want, or back, just for illustration purposes. It's kind of fun to walk through it day by day. But you can see the days going by and the P&L on the trade getting more profitable, and that's because there's time decay occurring, theta decay. And that's the idea of these non-directional strategies. You sell the option and you look for time to expire, and you look for the market to kind of stay within a range, again, below the red line and above the red line, essentially speaking. If you get a huge decline or rally right out of the gate, then these strategies will be under pressure and you're probably going to be out for a loss. And I can show you more about how that works, but it is automated. So you don't have to kind of nurse the trade. You can set the automation on ThetaTrader and it will monitor the position for you and close out your trade. And you can see here, we have something called the RTI. That's a color-coded indicator. And I'll explain here, and you'll see in just a second, the trade is getting more and more mature as time is ticking away. And then you get a blue RTI, and that means take profits, and then that can also be automated. So your order is automatically placed for you to close out that position. And if it were to turn red, that would be a risk indicator, too much risk, and get out of the trade, and your trade's probably sitting at a loss. Then you get out of that. So you get out with automation, whether it's a profit target or a risk target. And that's how that works on some of these non-directional strategies. Here's another one, Iron Condor, might be more of a familiar name. And this is the Russell, excuse me, the Russell 2000 E-mini. And then you can see the colors changing because you get elevated risk, but still don't do anything. And it goes back to green, and that means good, do nothing. And then I kind of forget what even happens here. We're getting close to the expiration date, so this trade should mature in any second. There you go. So it gets a profit-taking signal here, and you close that out. And again, you can automate that as well. So that is I guess, a good overview of kind of a way to approach this, the opposite side of the coin, as opposed to necessarily always trying to pick a direction, whether it's up or down or bullish or bearish. There's certainly plenty of opportunity where markets consolidate and where they go sideways as well. And you can use these types of strategies. And what was I know what I was going to show everyone. Just a second here. Let me refresh the screen. Give it just a second, folks. And while that's refreshing, here's the Russell here. And you can kind of get an example here of what I was even talking about. I hadn't even looked at this, but you see, you've got this period here where you make a new high, but right here on the RSI, really it kind of stays even, stays the same. So you might be thinking to yourself, well, if nothing else, maybe I shouldn't rush in to buy right now. And sure enough, that would have been the right move because, we pulled back quite a bit and then just kind of consolidated. So using just a simple approach like that, I think can be very helpful and instructive to at least keep you out of trouble and then give you an idea that maybe there's some opportunity for non-directional strategies where you don't always have to rely on trying to, pick the bottoms and pick the highs and that type of thing. So let me go back, see how we're looking here. And I wanted to show you also real quickly how to, one other thing, but let me jump to this real quickly here. This is how you activate your risk manager in ThetaTrader. And that will then close out the position for you when you reach your predetermined level of risk, and you can customize it here as well if you wanted. If you have a lower risk level, it just means you will get out more frequently. You'll have more frequent losers, but the magnitude of each loss will be smaller. And then you can activate your profit directive so that when you get that blue RTI, an order will be placed to close out that position for you automatically. So that's how you automate things. And then also, we mentioned some of the indicators that we look at. And let's see if I can open this up. Here's a good example of what we do every day for our clients. And just real simple analysis on the E-minis here. This happens to be the S&P 500, and this is the Russell 2000. And we're just looking at keeping it very simple. We don't overcomplicate it, and you don't need to if you have non-directional strategies a lot of times. And then we kind of do a little outlook about what to expect for future movement based on option flow, some of the, I guess you could say, what I guess the word I'm looking for is, well, I guess option flow, options data that we look at carefully. And that kind of informs us as well before we place a trade or send out a recommendation. And another big aspect to what we do is we have a trade alert service here. And let me show that real quickly. Where did I put that? Oh, here it is. It's up here. If you go to our home page, I guess I could tell you right now before I forget, go to our website at altavest.com, altavest.com, and you can get a free demo account. Well, we will actually send you trade alerts, and you can use ThetaTrader for free in demo mode. So it'll take you to this page here, and then you just go ahead and register right there for your free demo account. So that's altavest.com, and you'll see on the right side for those one-touch trade alerts. And what happens is you'll receive an alert via email, and it'll show up also on your dashboard here on the home page. We'll go over there, and then you'll also get it on your phone. So all you do is you touch accept, and all of our technology will place the order for you. And then if the order is filled, then ThetaTrader will monitor it and track it for you automatically. So that's a great feature, very convenient. People like that functionality quite a bit. And then we'll go ahead and just take a quick look at something like gold. Clearly, this is not one we trade with non-directional strategies. Something like, or I'm sorry, this is gold, and this is crude oil. So you can see the big spike here from what's happening in Iran. But so there are certain markets you want to apply non-directional strategies to, and certain ones that you don't. And this is a good example. So I just kind of put this up there. You can just see there's, along these lines here, it might have been okay. You're staying in a relatively tight range, but then you start to get movements like this with too many geopolitical factors involved. And, look at gold, lately, some of these ramp ups and then, up the staircase and then down the elevator shaft, as they say. But look here, the RSI on this high, pulled back, and then you get a new high, and then the RSI confirmed it. So you might think, oh, well, the RSI is confirming this new high here, so maybe I ought to buy it. Well, I don't know about that either. First of all, the RSI was like what, 85 or 86, extremely overbought. In fact, historically overbought. But nonetheless, way too much volatility there to try to do any non-directional strategies. So just thought I'd kind of illustrate what we don't do. And this would be the dollar. We like to follow currencies as well. Gold is really kind of a currency when you think about it. But not much to be done with these types of markets with non-directional strategies, or even something like silver. Look at here, silver. You made this this high here, and then the RSI didn't follow, and you might think, oh, gee, well, that's bearish divergence. Well, in this case, it wasn't. So again, the indexes are where you want to be for those non-directional strategies. I'm just sort of illustrating why we don't apply those strategies in these other types of markets. We like to stick with the index, and you get a lot of liquidity, a lot of depth, a lot of volume to make those trades, and then you have much less volatility to worry about. And again, a 3 or 4%, 5% move on an index in any one day is an enormous move, and that's just not going to happen very often at all. But let me see if there's anything else I wanted to double check before I let you go. I think I covered what I wanted to, kind of short and sweet, but we just kind of have a slightly different approach where we look for things that have opportunity in a non-directional manner, and we have some software to do that and help us along the way and make it convenient and user-friendly. So feel free to just go to our website, altivest.com, and get your free demo account here and get those free trade alerts coming to you. People like it because you just, quite frankly, you can see here a little video. You'll just get the alert sent to your phone. It gives you all the details, how much cash is required, what's the profit potential, and it gives you a chart so you can see, and then you just touch accept. So that'll wrap it up for me, David, and thanks everyone for joining me.
Okay. You have a couple of minutes left. Do you have anything else you'd like to share
Um,
till the next presenter
let's
gets here?
see here. Well, okay, I can do this. We just talked about non-directional strategies, and that's a big part of what we do, but sometimes a market isn't in a non-directional setup, and so there, of course, are bullish and bearish strategies here that are pre-populated. And for example, here's something on the E-mini S&P 500. It's really a combination spread. We call it a bull hedge, and you're simply buying an out-of-the-money call spread, and you simultaneously sell an out-of-the-money put spread to pay for it. So oftentimes you can do this strategy for either zero cost or a credit premium. So here's an example on a graph. Make it a little bigger here. So you're selling, I'm sorry, you're buying, you're bullish. So you're buying this out of the money credit debit spread. So you pay money for that, but to actually finance the purchase of that, you sell an out of the money put spread, and oftentimes it'll cover the cost. And so if you, in this case, happen to be bullish, that's what you could do, and you could place that trade and, use whatever quantity you wanted and just go ahead and place the trade, and then it is done, and then Theta Trader will track it for you just like any other trade as well. So yeah, I just want to clarify that we don't just only do non-directional strategies, but I did just kind of spend time on that to let people know that, there is definitely opportunity regardless of market direction, even when things are consolidating.
Okay, great. Thank you.
All right.
Thank you, Eric.
Thanks, David. Thanks everyone for joining me. Check us out, altivest.com, and get your demo account started right here.
All right, sounds good.
Okay, thanks.
Thank you. All right, so we have 3 more analysts to go today. And next up is the option professor. And Jim, are you there? Eric, I'm going to turn your screen share off. And Jim, if you can hear me, you should be able to unmute yourself now. Jim, are you there? You're muted if you can hear me. All right, while we're waiting for him to get it set up, just a reminder for everyone, be sure to subscribe to Timing Research on YouTube, Substack, or your favorite podcast app to get all the archives. And also, you can just go to and bookmark this page, and you'll be able to find the archives there as soon as I can get them processed today. Jim, are you there now?
Yeah, and
Oh, okay.
my screen's up.
Yeah, looks good.
Okay. All right, guys, I'm Jim, the option professor. Good to be with you today. I'll be sharing my insights and my experience and my ideas, but I will not be giving any advice. So please, if you do have a question, throw it up there into the chat box and let's see if I can help you with that, okay? In the interim, what I'm going to do is give you a little rundown of what's going on because this could very well be Turnaround Tuesday. So far, it looks like that's what the case is, okay? So what did we have this morning? Well, we had obviously some bad news overnight and more panic about escalation and retaliation and all the rest of it, right? But what we did also see is we saw a VIX spike. And where'd the VIX spike to? I'll show you. It spiked all the way up to 28.50. And as you can see, it's not at 28.50. So when nerves are calm, the market can stabilize and the market could actually hit a low point and have a very big rally in the month of March, possibly. We'll have to see. The other thing that occurred was the percentage of stocks underneath their, above their 200-day moving average. It was also under pressure today. You'll see that on the 5-day graph here. So it was coming down. Actually, I'll show you better on the 1 year. It was coming down, breaking down, but now it's starting to stabilize. Now, clearly, you need to get back above 60, 65 if we're going to be resuming any kind of a positive breath. But as you can see on my weekly, it came right down to a support line. So that's the number we'll kind of work with. 50 is a good number. You know, if it breaks under 50, big trouble. And if it can hold this number here, which it did today at 54, right? 54, that's the low, and that's where my moving average is. So there's your two numbers for that index. It's that gauge. 54, don't want it underneath that. And of course, under 50. On that VIX, let's come up with some numbers to look at there to see if we're out of the woods yet. Okay, on the 5-day graph, you know, it is rolled over. The red line's turned over, which is nice, but it might just be filling the gap here and go right back up again. So you really got to get back under 20, right? Got to get under 2019. Under 2019, percentage of stocks pick up, and I'll show you where you want the S&P to close. This is the S&P 500 SPX. Okay. Where do you want it to close above? I'll show you right here. You want it to stay above here. That's 66.82. So you don't, because under there, can you see the next stop could be filling that gap at 5,800 if things really, if the wheels really came off, right? So that would be a problem. So that's why you definitely don't want it underneath 66.80, but where you'd like it above is the purple line there, and that's at 68.03. So it's doing that right now. That's very positive. So if we can close up here, and if we can get that VIX under 20, and we can get the percentage of stocks above their 200-day average, back above 60 to 62, a case could be made that we might have seen the lows here today. Again, if Trump comes out and says, you know, we've killed their nuclear stuff and we killed their missiles and we killed their Navy and we're leaving now, then, of course, that would be maybe very welcome news from the market. The price of oil, big spike up, right? But again, I'll show you that there could be some resistance up here. Doesn't look like resistance here. This thing told you it's a bull market since 56, right? Okay, but if you, that's why I use the different time zones. Can you see there's resistance on my gold line? Where's the gold line at? Comes right in at 77. What was the high today? 77.98. That's pretty close. And we're now at 72. So the oil prices are backing off, right? That's a good sign if you're bullish on the stock market, because if we go up to $100 crude and filling up the tank goes up $20 a gallon or whatever, $20 a fill up, it's going to hurt the spending. Don't forget, we've got a lot of tailwinds here. That big, beautiful bill is going to give everybody a nice big tax refund, and it's also going to take less money out of your pay. You have got the situation of deregulation with the banks. You've got some hopes that interest rates could be cut. So there's a lot. And of course, expectations on earnings are quite good. And the manufacturing numbers are very good. The ISM manufacturing and services is above 50. That's expanding. So this is no time to get like the world's coming to an end, I don't think. I think it's a time to monitor to see if it's over. Because like I say, this is still in a uptrend. See, all three lines are pointing up. Now it's in a congestion. But I'll tell you where you're really going to take off if it can get above the red line of 6,900. So if this thing starts closing above 6,900 and they catch everybody short because of this war, you know, it could be a very big move on the upside. So again, holding this number 6680, closing above 6803, and then closing above that 6,900 area. I think that would be a real good recipe for a big up move in March. So let's keep an eye on it. It's not a definite deal, but it is something that not everybody's positioned for. And that's, of course, when you get some pretty big moves, when people are not positioned. Just like if this war starts, going very badly and spreading or whatever, and gas and the oil does go up to 85 or 90, the market's not priced for that. And that's where you can get a real waterfall because everyone's going to want to come out. So again, early to say that. And again, I'm monitoring to see if in fact that 28 on the VIX was telling us something this morning as a blow off. And maybe what was the S&P low today? Let's see. Yeah, maybe that 6,700 area might have been the pullback low. Again, I said 6680 is big support. That's only about 20 points away. So it came down into the neighborhood and it clearly spiked out of that neighborhood. Now, again, you're not out of the wood yet because you got to get above all this junk. And that's where 6,900 or better comes in. But to start doing that, you need to get the red line turning up, and that's where the 6803 comes in. I'll show you a couple of strategies that I thought were outstanding. Oh, we got some stuff here. Okay, let's look at some stocks. ISSC, isn't that old Fair Isaac? No. Oh, it's innovative and support. I'm not so familiar with this company, but I'll tell you technically, it looks obviously like it's off to the races, but certainly it's extended, right? So let's look at the RSI and see what that's telling us. Okay. All right. So anyway, the RSI looks fine, but again, you're extended up here and you're extended up here. So, where's the time that I'd be interested? I always like reversion to the mean. So when the thing went from 22 back down to here to 18, this would be where I think loading the wagon would make most sense. Up here, could keep going or it could pull back and revert some more, but it clearly looks like it's in a nice uptrend. A couple of questions I always ask on every stock, right? And the first one is, are revenues rising? Are revenues rising at ISSC stock? Let's see what's going on there. And what does it say? It says, yes, revenues are significantly rising. Company reported great growth. So obviously that's why it's going up. 36% growth on revenue. There's nothing wrong with that. So again, you got good things going on here with it. And, but again, as far as entry level is concerned, that's not my cup of tea. Come back to 22 where test that high right there. That would be more interesting to me. All right. How about KRP? All right, guys, KRP Royalty Partners. I don't know what they do, but it sounds like royalties, which means either oil or mining. Again, you're bringing up a lot of good companies, but you're certainly not getting in there. They're not at the lows anymore, that's for sure. 20-year graph says there's a lot of resistance right here. So this is a key number. If you can close above 15 bucks, you're in good shape. If you can't, there's a reason why this thing has been downtrending. Same thing here. You see the neighborhood I talked about, 15? You got problems right up here. So there's a reason why it stalled out. Is it going to come back down and test 13 on a pullback reversion to the mean? It could. But if it starts closing above $15, there's nothing stopping it. So that's what I'd keep an eye on there. And of course, this one here tells you that it doesn't tell you that the 15 is resistance. That's why I like to use the weekly and the monthly. All right, so there you go. All right, Marvell is a company that they seem to, they seem to be making money, but they just cannot get out of this funk here. And believe me, I'm very frustrated with that because I thought that it was going to go fill that gap. And if it does that, believe me, that's a heck of a nice move. And these call options have shrunk and shrunk and shrunk because all this action here has definitely brought volatility down. It is holding the gold line, but there's a gap there. So I don't know. Are they going to play some kind of game where they bring it down to fill that gap at 72 and then take off? I don't know. But this is messy, leaning towards negative. But again, the company does seem to be making money off the AI stuff. We'll have to see. But right now, it is definitely not doing very well, but it's not doing that worse, not terrible either. You know what I mean? So again, that's what I'd be looking for. Is it going to fill that gap and then go under the yellow line just for a little bit, like it did here, or under purple, like it comes under here? The next thing you know, it's up at a 105. Is it going to do something like that? Well, there's a lot of proof to be done. Clearly, you got to close above 80. If you close above 80 and then you close above 85, you're probably off to the races. But it's been very frustrating for people who are looking at that. And these are some of somebody's asking about oil and gas, revenue, royalty type stuff. This is one MPLX. I think another one is called APLX or AMP. No. AMP LX. Well, anyway, the one I just showed you was a kind of a popular one. If you notice, it's got a long history to it, and so that's it. Okay, Mealy. Everybody loves Mealy because they are the only game in town, I've been told, pretty much over there in Brazil, and they're kind of like the Amazon of Brazil. But it doesn't look very good to me right now. If you look at the long-term graph, this is a neighborhood where it's got to hold, or else it could really go into the abyss here. So getting back above 1800, really a positive sign for Mercado Libre. Again, on the 5-year graph, you definitely are down here. So here's your parameters. You want to get it back above 1800 and you want it to definitely not get underneath 1560. So now you got some parameters to work with. But this has definitely been a negative thing. And I'm surprised because Brazil actually had been doing a little bit better. And this is a big one down there. Let's see what Brazil's looking like. Maybe that's in trouble. No, you see it's had a nice uptrend while this stock has not. So that's kind of interesting. It could be a valuation issue. I don't know what the PE ratio is on it, but it could be something along those lines. But you can see there's parameters when you look at the weekly graph. And the fact that the purple is rising is a good sign. So again, this stuff here could always turn around, but you need to stop. You got to make sure it doesn't get under here. And then you definitely want it to get back above blue because blue's been pretty good the whole time. So there you go with them. And again, it's kind of hard to believe the ETF on Brazil's going up and this thing's going down, but that's what's going on. But it had a big run. That's a big run, $600 to 2,600. So that might be the case right there. Let's see what else you got here. So I wanted to show you a couple of things that I got in my mind here. Okay, I'm going to show you right now. And then if you have more questions, just shoot it up there. Okay, guys? All right, IGV. Oh, yeah. Look at IGV here on the 5-year weekly graph. You see that yellow line? That's very important neighborhood. What's that telling me? If it can stay above that, you see how it dips underneath sometimes, then comes right back up? So 80 is like a huge number to me, right? Huge number. All right, so and this is software, they've thrown out every baby with the bathwater on this thing, right? And so obviously, and of course you have a double low down here, right there. So bottom line is, but you got something to defend. You got something to defend. So what's in this index, right? Well, all the big companies are in there, ServiceNow and all the rest of them, but all the software companies. But I'm going to talk about Microsoft, okay? MSFT. Now, I just was showing somebody this idea earlier today. So again, you see Microsoft is down here, could be at a low point, right? And we saw that they're a big part of IGV. So let's just say we looked at a strategy here because I'm an option guy, right? So, and I've been doing them for decades and decades, so I know all the strategies. Here's one that I find interesting right here. Let's say you thought you're going to defend that. You see there, 360? Okay, obviously you don't want it to get underneath that number. So this strategy, of course, this strategy is not, I'm not recommending it. It's not right for everybody, but I'm going to tell you how it works. We're going to look at the option prices real quick. Let's go out to May. That's a couple of months out, right? It's already going to be March something or other, right? So go to May 15th, and I was looking at the 355 puts. Now they're going for about $7 now. That means I'm agreeing to buy, if I sell it, I'm agreeing to buy Microsoft 100 shares at $355 until it expires on May 15th. I'm going to get about $700, right? Okay, so that's the market's at 404. Now let's just say I think that those lows are in on Microsoft, right? And I think it's going to go back up. So if I wanted to buy a call with that money, I might go out a month and go to the April 10s. Now I got $7 to spend. I can either buy, and these numbers have changed, since this morning. Because look, you see this thing here was at 9 this morning. It's already at 11. Right? This thing here was at 7. This was the one I was looking at, the 420 earlier today for about 7. So if you could get that at 7, just to use the math, you could take that put option you just got at 355 and buy a call at 420. Then you'd have unfettered upside potential. Or you could buy the 420 calls for 9, sell the 450 calls for 2, put up about $7, use the 7 that you just took out of the put and pay for it. So if it goes up to 450, you could make $3,000 minus your premium. If it's above 450 on expiration, April 10th. And also you'd obviously keep the premium, right? Well, as long as you'll keep the premium when it expires or when it goes down to 0. But anyway, you'd have an upside position, and it would have been financed by agreeing to buy the stock at 355. Now let's look at the chart so you can see where I'm coming from. Now, like I say, if the war escalates and people are bombing and things go crazy and oil goes to $90 a barrel, nothing's going to work because we're going to probably have a very, very significant drop because that's an inflationary print that would come up that is not factored into the prices. Okay, but if things were to settle down, and if today at 28 on the VIX was a stretch point, and if 6,700 was a stretch point on the S&P, and if this stock has hit the lows on this move from 560 all the way down to 380, if that's over, and now you're using this as a defendable point by agreeing to buy at 355. And you think there's a gap here that's going to get filled. You see this gap, 440 to 480? If you think it could spike up on a reversion rally, then this idea may have some merit because, again, you're agreeing to buy the stock down here at 355. So you have to have the money and the willingness to buy the stock because that's what you signed up for. And you are going to have a position either unfettered at 420. So if it went all the way up to 480, that call could go to $6,000, because it'd be $60 in the money, 420 to 480. And the only money out of your pocket was the ones they gave you for agreeing to buy the stock at 355. And obviously, if it goes up to 380, the put will probably be very close to 0. So you close that out. And if it goes up to 380, these things are going for $6,000. So that wouldn't be bad. How about if it only go to 460? Your 420s would be in the money by $40. That's $4,000. And again, if it goes up here and the option down here at 7 goes down to, 1 or 2 or whatever, you can close it out and you're out of then once you buy back the option, you're out of that responsibility. So again, when you're looking at put selling, you're agreeing to buy a stock. Is it a good idea sometimes to buy a stock at a lower price? Maybe. You're looking to sell a put because not only are you agreeing to buy at the discounted price off the high, but you're looking to get well paid. And when the market tanks, the puts are very much expanding. Ergo, it's a better time to write them from the standpoint of fat premium. So fat premium and a relatively low striking price versus where the stock has been might not be a bad combination. And that's how you effectively use a combination of put writing and call buying at the same time. Okay, let me go into some other strategy real quick, and then I'll take some more of your questions. This one is on Tesla. Now, I'm going over things very quickly, but we have a seminar coming up on Thursday where I'm going to have a lot more time to do it slowly. And people who subscribe to my newsletter, they get my cell phone, and we have one-on-one coaching to make sure you understand not only how options work, but the uses and risks of all the strategies. And if you get ideas from other people, other places, you can bring them to me and we can analyze them together. So it's a very good situation I'll talk about in a minute. Let's talk about Tesla. Tesla's on the ledge here, right? Can't you see? It's on the ledge. It's either going to hold here and go back up, or it could really fall down dramatically, right? So let's just say you had a call option here at 400 bucks. And I'm going to give you some math here again. Going to go to the April 17s. And say you got the 400 call here, what? At 22 bucks, right? Now, if that stock's going to collapse from here, that's not going to be very good to own that thing and have it go down in price, right? So an alternative might be to sell the 430 calls for 11 bucks. So what do you got there now? You have a call at 400. That's 22 bucks. And you've turned it into a vertical call spread by selling the 430 calls for 11 bucks. You've reduced the risk that you have on it from 22 down to 11. Now, what are you going to do with that 11 bucks? You could sit there and hope it goes back up, but you might want to get some insurance. Why is that? Because it looks to me like under certain circumstances, could this thing drop? And if it dropped, how far down would it go? Well, I got something down here at 300. What do you got on the one? What do you got on the 1 year? You got here down here at least down around 360. So there could be some significant downside potential. It's not like the stock's never gone down before. People have a short memory. Remember, it went from 500 all the way down here. Well, don't forget, these moving averages are down here again. So I don't know if it's going to have a full Monty correction like it did here. But if it does, this idea of turning your call into a vertical call and then taking that premium and looking at the options later in the month, like the ones at 320, 3 weeks out or 2.5 weeks out now, and looking at the 380 puts, well, they're going for 9. You can even go 385 or maybe get another week on there. Let's throw another week, go to the end of the month almost. And throw it into a put option at 375 or, put up a buck or so. Yeah, no, right there at 380. So you'd be long the put at 380 using the money you got from the call, right? And what could happen? Well, I don't know what's going to happen for sure. Nobody does. But let's say it did break to the downside, and let's say it did break down towards 300 as between now and the end of the month because everybody starts selling everything. Well, you'd have a 380 put that would be in the money at 300 by $80. 80 times 100 is $8,000, right? Now you would be out the 2,200 that you owned on that call. So you take 8,000 minus 2,200, that's still, almost $6,000 to the positive. Not bad. A lot better than sitting on a call at put 400 if it goes down to 300 and see 2,200 bucks go to zero. And then you still have upside potential of the difference between 400 and 430, which is $3,000. Minus your 22 bucks, you're still up about 800 bucks if you got the full 3,000. Now, again, that's a lot of math for many of you guys. And again, it's just knowing options very well, which I do, and knowing a strategy that might be appropriate for the circumstance, which it may. So the bottom line is on Thursday, you'll have an opportunity to go to a free seminar. And if you become a subscriber, you can what do you call it? You can get this stuff in your box every week, and you can have one-on-one education with me, which I'm more than happy to do. All right, I'm going to go back over here and see if we have any more questions. You guys have any other stocks you want to take a look at here? We are coming into the last 5 minutes or so. So again, I'll give you some more update on what I'm seeing here on the other markets. The U.S. dollar. Just give you a quick rundown. I've been telling people on the US dollar, if it stays above 96.98, it's going to be going up. And that's exactly what's happening. If it breaks under 96, it's going to accelerate to the downside. How far? It'll go, I think, if it breaks under 96, I think it could go way down here. And it might be fast. And that's where the big trend is. But again, it could still surprise people with a nice rally into that resistance. Crude oil. Like I told you, I showed you before, there is some reason to believe 77 is a resistance point. Not from that chart, but from this one. The gold line, this one tells me that 77 might be it. That would be bullish for stocks if they can back that off. And the products, the other products also have jumped up quite a bit. Gasoline, because the refinery's been hit. So again, some of the refining stocks that people have liked are under pressure here today. But let's look at Valero, which is really the kingpin of refineries. And Valero's under some pressure too. So again, if oil and everything's going to back up, these guys are going to back up as well. So be careful with your oil stocks now, because again, things could change a little bit. And again, the things could cool off just a little bit. The other thing is on interest rates. They've been rising because there's inflationary concerns. And I'll show you what I've been doing. I used the 20-year graph. Now, again, they're still breaking to the downside, but we need to get under this point here. That's at 388 yield. And we need to get under this point here, which is 360. When those two things occur, you're going to get that interest rate drop you're talking about. But if we start breaking above these numbers, which is around 4.25, and start going to 455%. That is something the stock market I don't think is ready for, so that could be a problem. So watch this chart dramatically. Again, could be a big opportunity in the bond market for yields to drop dramatically, or it could be everybody's hoping for that and it goes the other way. Very critical point there. And global markets, I was showing people this. The global markets have definitely been rocked. Here's Korea. Let's put it on the 1-year graph. See, but it's on support right now. But that's a big crack. That's a big crack in Korea. But that was a big move up. But right now, it better hold that number, right? Watch that. On Japan, how's that doing? Show you all the Asian markets real quick. This is Japan right here. Again, on support. You notice everything's kind of on support. S&P kind of hit some support. This guy, so again, turnaround Tuesday could be going on. If they get broken here, boy, is it going to be a little bit more acceleration. Same thing with China. China was under a lot of pressure here. Again, that doesn't look good at all. And Xi's supposed to meet with Trump at the end of the month. So that could be wild. W2TS. Yeah, it's on support right here. You don't want it underneath 310. No doubt about it. Stay above 310 and you'll be okay. Again, you're getting into stuff that's already happened quite a bit. And things that already happened, they revert to the mean. So that's what makes it a little bit dangerous. And Netflix, again, I thought it was a real bargain down there. I'll show you why. And once they walked around for that deal, it really took off. But if you look at the 20-year graph, you see it hit the blue lines. I thought it was a very good time to take a shot at 80. No doubt. Now it's having trouble because it's had a rebound rally, but the rebound has taken you right into a neighborhood of resistance. And there's a gap there. So I'd be careful up here because of that neighborhood of resistance. But there's a gap up here to fill too. Okay, guys, we're getting near the bottom, and I wanted to explain again, we do have a free seminar coming up on a Thursday. Now, I have a alert service that I send out with option ideas every Sunday night. And here's a list of 40 of the ideas that expired either January or February. So there's been 40 ideas here, and this is what we try to do. Find low-priced options like Abercrombie and Fitch for 275 and then get a spike in the price. And that's what can happen when you're on the right side of low priced options. Obviously, they don't always work this way, but there's 40 examples here where they did when they expired in January and February. And you've heard these companies, I'm sure. Alibaba, and you've got Chevron, and you've got Dollar General, and all those metals. You're at copper. I've been all over copper, and then you got a low aluminum and everything else. So if this, and this is all from last year. So there's a lot of ideas I think have a lot of merit. If you'd like to get started on this, David will put up a link you can check out. And also, when you go to optionprofessor@gmail.com, I can get you the link for Thursday. So again, I'm going to sign off here at the bottom of the hour. Let David put up the link if you'd like to get started. You've got two choices, quarterly. They're all discounted $100, $297 for 90 days, or for an entire year, you get it all the way for $897. That's every Sunday, ideas, option class, and coaching with me. Thanks for being with me now. I think this is the end of my time slot. Again, this is Jim, the Option Professor. Hope to see you at the seminar Thursday. And I hope you take a shot at us and give us a chance with our options alert. I think it'd be worthwhile. Okay, thanks a lot, guys. Back to David.
All right, thanks, Jim. And yeah, so check out Jim's links. They're in the chat there. And next up is Sonny Harris. Sonny, are you there?
Now I'm here.
Hey, Sonny.
Hi, how are you doing?
I'm good. How are you?
Excellent.
You should be able to
And
share
we
your
don't,
screen.
yeah, I need to share my screen and show you my charts, huh?
Yeah. What were you about to say?
I started to say I don't have a presentation today, which
Yeah,
is true.
Yeah, it's just everyone enter symbols for Sonny and
Yep, put some symbols in the chat and we'll take a look at all of them. Okay, let's see. Did I share my screen already?
yeah, I see your
Okay, my Sunny
chart.
bands.
Yeah. Yeah.
All
Or
right,
seal.
well, go ahead and put stuff in. I'll talk about something else while I don't have any symbols yet.
Okay.
In Netflix, we got in gold. Okay, this is crude light, CL crude light. These are the futures contracts. I watch futures, not stocks and stuff for the most part. Look what it did yesterday. So it went all the way up to here, turned around. Well, then it went up a whole lot more today and then back down. So right now, this is currently the price. And you can see this is up 2 points, $2 at this moment in time. But who knows what's going to go on with this? It's going to depend on that war we just got started with. Let's look at the Dow for just a second. And you can see we went down to this is the green lines and the red, gold and purple lines are my Sunny bands. And I think I'll explain how those work real quick. The gold and purple lines are the dynamic moving average, or DMA. They're the basis of the Sunny bands. And the nice thing about them is it calculates its own inputs. You don't have to put 9 and 18 in there. It'll only use it as a seed value, and you can just leave it alone, and it will calculate its own lengths, slow length and fast length. And you'll see in here, this thing doesn't cross over back and forth, back and forth, back and forth like a moving average does. Simple or exponential or weighted, any of those. They have crossovers. That this thing only has crossovers, like right here. There's no crossover there either. Let's see. There it went below the 0 line on the histogram. So here's a crossover. But for the most part, you can see that that's just saying long, long, long. So that's a good thing. So the dynamic moving average uses calculus to calculate the lengths. And then we add 1.2 average true ranges to that to get the inner band, 2.0 average true ranges to get the outer band. On the bottom, 1.2 average true ranges subtracted, and 2.0 average true ranges subtracted to get the bottom band. You'll see one of the things that everybody asks me is, isn't this just like Bollinger Bands? And no, it's not. It's not based on a simple moving average. It's based on a complex moving average. And Bollinger Bands match top and bottom. You can see this isn't the same as it doesn't make a mirror image above there. Here, no mirror image. A little bit of a mirror image, but not, it doesn't have this drop in here like that does. So it's kind of magical. Took me 3 years to come up with the formulas and the how it works and all those things. And I'm a mathematician, so it's not like I was having trouble with the brain working. Although I am having trouble with the brain working today, if I'm a little slower than normal, please forgive me. I have a concussion, and if I turn my head, I get really dizzy. All right, let's look at Netflix. NFLX. Oh my goodness, look at that. Well, the buy signal is right here. You see the sunny bands buy signal. So we have red bars coming down, then we have blue ones going up. Don't get a signal yet. Here's another one going up. And this one is the confirmation. So this one says buy. If you obey it and buy right there, you'd be in a really good position, 79 to 97. So I think, let's draw an attractor in here. Attractors in my book are anything that attracts price to it. So you can see it hit here, and it hit here again. Then it gapped to here, came back up to here, and now it's below this the whole time. So this thing crossing over the DMA, here's one blue candle, two blue candles. So we go long, and we would have been long for this whole thing. I'm guessing that this is going to continue on up to this point. Let's put that line in. Yeah. So this is at 108. That's where I'm expecting it to settle down. What else does somebody have? Somebody said gold. Do you want GLD or you want what I looked at, which is the futures contract? This is the futures gold contract, and it was doing fairly well, recovering, and then it hit the skids today. And I'm still thinking we're going to have gold 6,000. This is 5,126 today, and I think that we're going to go all the way up to 6,000. Let's look at the other one. And this is GLD. It's thinly traded, though it's hard to figure out. That's the spider GLD. Is there a gold? Yeah, so gold.com. We're right at the dynamic moving average, and the DMA is flat. That tells me that we're probably not going to go much further, but we're going to chop around a bit more because the DMA is flat. In order for us to get a trend going, the DMA has to move up or down, one or the other. But this usually is a sign that it's a line in the sand and it can't go much further than that. Okay, TBPH. Oh my. Dropped out of that one real fast. So this is a good example of the DMA being flat. So it's flat all along through here, and price doesn't go much further than that until right here. We've got two red candles, second one below the first one. So there's the place to go short, and it goes from, let's say, 18 down to 14. And where's the attractor? Let's see if we can find an attractor. Sure looks like it's right through here. Oh, And there it is. Again, I drew it by looking at this area right here, and look where it stops. Those are magical things. CSTM. Well, I don't see a big drop in this one. So we are still going up. Got a gap to fill here. So maybe we'll fill that gap and then continue to go on up. So I'm looking for it to come up to the upper outer band. Right now it's at the upper inner band. I'm looking for it to move to the upper outer band, but I'm guessing it will do some hesitating first. So I think we'll chop around in here and then fly on up to the upper outer band. You can see the histogram on the bottom of the chart. We've got gold, gray, and red lines on the histogram. And it's pretty strong because it's coming up high here. And then now we've got the sell signal side. So it's below the moving averages, but look how small it is. That's just really small little lines. So what do I think? I think it's going to come out of that and go back up again. PAAS, did I get that right? This one dropped. It was going up nicely. One bar red, second bar red. I would hesitate to sell this because it's right at the flat DMA. If you really want to take a flyer on it, then the thing to do is to go short. But usually the flat dynamic moving average is a barrier to further movement. So I would be extremely careful to see what this is going to do tomorrow. And these are daily charts. Let's look at different time frame. Let's look at a 15-minute chart. And look how it goes just along with the flat DMA on the 15-minute chart. And it's right at the attractor from this. See this yellow dot? This is my PHW indicator. Stands for potential hourly wage. And the nice thing about it is it calculates. Here, let's bring this up here. Come on. It calculates the ideal amount of profits you could make from buying this. And it's not going to stay like that because the market's still open. And it gives you the PHW, which is potential hourly wage. That's how much you could make. It gives you the ideal as well. So you could see if you could catch every yellow dot, long and short, what that price would be. See if we can get it to stay for a second. Now, and it gives you, so the ideal, then it gives you the ideal number of trades and the date span for this chart. And whatever the pH there, 27 something. I can't get it. There it is. $27.25 profit out of a $60 investment. So that's the way PHW works. When? Is that a stock symbol? World Health Energy Holdings. Yeah, I can't. This thing's so thinly traded, I can't get a signal out of it. Let's go back to daily and see what happens. Yeah, that's just impossible. So it's sideways and it's been sideways, and that's all she wrote. All right, we have some more symbols, please. Oh, you were asking for when it's going to happen. I don't have a way of telling when. AVAX. I can tell you where it's likely to go, but let's see. AVAV. How about that? All right. So this thing tore off down through the DMA, kept on going down, down, down. And then it came back up here at this level and hit the DMA with purple on top. Purple on top means the bias is to the downside. Gold on top means the bias is to the upside. So it came here, turned around. I touched the DMA on a wick, turned around and came screaming down here yesterday from the DMA down below the lower outer band, which is a negative signal, definitely. But then today we've got a blue candle, so it's negating the suggestion that we're going to continue on down. But just from looking at this chart, I blur my eyes and then I see what I see. But if you blur your eyes and look at this, it looks like it's going to go farther down. Although there's an attractor right there. Let me draw that in. Okay, so this hits here twice, hits here, and goes back up again. It hits over here, that's a corner. And now it's hitting that and coming back up inside of it. So, this is a really challenging one. This could go either way. It could go up to the DMA or it could continue to drop. I say all bets are off until we know what the war news is tonight. Oracle. It's tiring out. So we've had some definitive moves down, continued even farther, then back up to the DMA, and now we're congested. And the DMA is almost going sideways. So that speaks to this being in congestion. So I'm guessing Oracle's going to go down some more. Unless there's some big announcement about how they just won the latest contract on something or other. But then we also have to look down at the dynamic moving average histogram. You see it's been green for some time. There it turned purple for a minute. It's back green again, and it's coming. The path of this is moving up towards the zero line. Right there's the zero line. And as it moves up toward the zero line, the chances are it's going to turn and go the other direction. So we could have a buy about the time it hits the DMA. When? I don't know. Probably about here, 2 or 3 days away. So that's the Oracle chart. What else do we have? Let's look at Tesla. There's the flat DMA. It's up above it. Here's the tractor. So we've got a little farther to go down just to meet the attractor. Not even a point. But I tell my clients that to me, Tesla is not a buy and hold stock. It's a tradable. As you see, we go up and then down, up and then down, up and then down. It's kind of cyclical. It's not a buy and hold on type. Microsoft. That's been going steadily down since Halloween. Steadily down, down, down. We have one exception to that. We create a gap up to here and then back down. And it's still going down after that. So let's look at NVIDIA. Sideways as can be. This is just flat, flat, flat. So the only thing you can do with this one is stand aside or trade these little pops up and down. They're like, it's that 4 bars at a time. 4 bars and then take your profit. 4 bars and take your profit. I have a client who's been trading Sunny Bands for the last 5 or 6 years. And he sent me an email at the beginning of the year. It said, "Thanks, Sunny." And his performance report was attached. He's made $4.5 million in the 5 years trading Sunny Bands. So that's admirable, I would say. And he trades it only on NVIDIA. So you can know that it's possible. What else do we have? Anybody? Symbols. Well, just about everybody's in the choppy. Here, this is Apple. And we go up to the outer band, down to the lower inner band, up to the upper inner band, and then we're back at the DMA. This one looks like it might just go up and down again. Okay. That looks kind of like Apple. So from down here, let's do something else. Let's do Fibonacci lines from this low up to this high. So sure enough, we stumbled at the flat DMA, which was at the 2360 line on the Fibonacci retracements. It could go back up to this one, or it could come down to this one, which is a 78. No, this is 38.2, sorry. 38.2 or 2360. So we're looking at a possible 79.6 or 76.7. 79.60, or it could even go down to the 50% at 76.64. I'm betting it's going to come down to 83.30 and then decide what to do. And it might be down, it might be up. So keep your eyes peeled, keep your feet on the ground. It's hard to do. ALB. They're all looking alike. Let's do Fibonacci on this one too. Let's do it up to here. Okay, so we've got this long run, got a Fibonacci. It comes down to the 2360 level right here, falls a little below it and comes back up to the DMA, falls a little below it and comes back up to the DMA. And then there's a gap and a gap. It's covered them both so far. So it could be over. We could have gotten rid of the gaps, or it could come on down to this 2360 level at 164.33. What does this company do? Albemarle. I don't know what it does. Okay. So if this comes down further, it's going to turn the bands totally down, and we're going to go down to the 38.2 level at 145. What else have you got for me? Surely somebody wants to look at another symbol. Did I look at gold already? I think I did. Let's see. I'll look through my scanned list here. Give me just a second. Here's one I like. Walmart. Everybody else is in a downdraft, and Walmart's holding steady at the DMA. That's a sign of strength considering the rest of the market. AMZN. Get that typed right. Amazon. This looks like a Tesla stock. Up and down, little up and down, up and down. It was just about every 12 weeks, it's going through another cycle. Here we have this gap down and another big gap down. Those need to be filled. And the green lines are starting to tilt up on the histogram. So it's going to try to go to this 0 line. And we'll probably get up in this area at the lower upper inner band. So if I were going to do this one, I'd be trading from now 208 up to 218 and change. That looks like a pretty good one. Oh, good. SLV. Silver. And we've gone up to the DMA and back down to touch the lower outer band. You see this wick on this thing? Comes down to touch the lower outer band. And chances are it's going to go up from here. It and gold. Better knock on wood, because I hope I'm really thinking gold's going to go to 6,000. But we shall see. I called 5,000 about 4 months ago, and we got that. I don't trade silver just because I haven't, and because I haven't, I don't have an opinion about it. But there are a lot of people talking about trading silver these days. Is that HCI, Jake? HCl, hydrochloric acid. I'm going to put an I in there and see if we get a symbol. Okay. Here we had a run for the DMA, slipped back because it couldn't hold it, touched the lower outer band, went back up again on a gap, touched the upper outer band. Then we have a blue bar, which is a sign that it's moving upward, and a little bitty red bar, and another blue bar today. If we could get a little higher than this, in the value on this candle, I would say we're going upward next. But for right now, that's right at the attractor. See, we've got congestion here. We've got it touching here. We've got it breaking through here and coming on down. Here, we touch it again, comes up, touches it again, falls, comes up, touches it again and falls. So that sounds like, to me, we're going to go up again and then touch it and fall again. HCI group, I don't know what that does. EQT. Okay. Up and down, up and down, up and down, down, up. And it's above the attractor, so I think it's going to go up some more. Let's draw that in, and I've got 2 minutes left. Does anybody have anything emergency symbol? Okay, EQX. Up and down, up and down, up. It's congesting at the upper outer band. So that looks like it has some more room up, except for today's candle, which came down and on a wick, it touched the DMA. So I think we're going to go down a little below the DMA, but the DMA is a barrier to future movement. So we'll see. Be really careful with this one because it could go on down and then through it. But I'm thinking we're going to touch the DMA firmly and then go back up. All right, I'm Sunny Harris. Everybody ready with a pencil? This is my cell phone number. There you go. There's my cell phone number. Call me anytime. Ask me about Sunny bands. Ask me about a particular symbol. I'm happy to answer questions. I'm happy to give you a 10-day trial of my Sunny bands if you'd like. So I work 7 to 7, actually 6:30 to 7. So you can call me between those hours and we'll visit. We'll visit a little bit. Oh, yes, and my website is moneymentor.com. And I've got all kinds of things on that website for you to enjoy and explore. All right, David, thank you so
Thanks,
much.
Sunny.
Thank you.
Great analysis. Thank you for being here.
I appreciate it.
I had one space still open this morning, and Sunny was able to take it. So very happy to have
and
her
I
here today.
appreciate the opportunity.
Yes. All right. Well, thanks, Sunny.
All right. Thank you.
All right. And last up to close out the day for us is Harry Boxer. Harry, are you there?
I am indeed. Can you hear me?
Yes. Sounds good.
All right, great. Well, let me know when I want to start.
Yeah, you should be able to share your screen now, and then you can start your analysis.
All right. Good. Should be seeing my chart screen.
It's loading. Okay, yeah. EDSA, I see that.
Right. Nice
right.
day trading here. Look at that one.
Oh.
Yeah. Okay, folks. Well, this is Harry Boxer, and I'm called the Technical Trader. The site is thetechtrader.com. Let me start out by saying you could join me anytime for 2 weeks for free, no credit card. Just sign up, get into the room, see what we do every day. Nobody works harder than me. I'm on early about 4 a.m. Pacific Coast time until late in the evening, but mostly on live webinar updates and reviews of chart patterns all day, every 20, 30 minutes. I jump back on, sometimes every 5 minutes, depending on what the market's doing, what individual stocks are doing, etc. What I'd like you to do is throw up some symbols for me so I can analyze your trade for you. In the meantime, before we get there, I'm going to show you a couple of trades we did today. I'm a day trader. I look for intraday patterns. This morning when EDSA exploded, literally went from pre-opening from 232 and spiked to 335, so it was about $1. A very orderly retrace occurred. It's about a 37%, almost a 50% fib retracement. When it broke out again and got some volume right here, we went long, right about the $3 range. And within less than an hour, 45 minutes, it was 416 for our first trade of the day. Now, late in the day today, I told my people that if this thing gets to 380, 82 with volume, you may want to get in. It popped, and then it formed a pennant, at which point I said, this looks like it wants to go higher. It may even fly after the close. Well, it went from 384 and just exploded here a few minutes ago to 435. My target was 440, 450, so we didn't quite reach it. And you can see the sell-off on volume right here. Nevertheless, the volume is nowhere near what it was when it went up. So let's just see if it holds and goes up. But the kind of stuff we look for every day are, pop consolidation patterns. We had a pop falling wedge, pop coil, resulting in a 1, 2, 3, 4. This is the fifth wave up. It may even extend further. If you want to post some more symbols, Jake, thank you for your symbols. Just fighting the bad cold. If you got anybody else has anything they want me to post, let me know. Some more trades we had today. AVXX, which is the ETF for AV, the drone manufacturer. Pre-market popped and pulled back. When it broke out here early, I put a trade on it at about 5. And within a short period of time, it was 576. Then from the wedge, ran up again, reached 597, and eventually got over 6 to 601 for the pullback. But a nice trade there from around 5 to 6. Quite a few trades today were successful. Ingram, which pulled back, and I said, this is a buy if it pops across 24. It did, got up to 25.50 and backed away, but still a nice little $1.50 trade there, and a very quick one too. So many stocks did well today for us, but I'm going to get to your symbols since we only have a half an hour. So Jake wants to know about EDU. I'm going to give you this analysis on many time frames. First of all, it's that Chinese educational company, which at some point was a monster. You can see it went from 9 into the $100 range. I think it reached 90 in 97, 98, and then came down. I don't like this chart. I don't like when stocks break trend lines, channels, and when the angle isn't steep enough like this here, and it's shallow, and then it breaks down. This is where I would have stopped the stock under 53 3/4. Now, I don't know if it can hold secondary support, which right now is right about there. So it's on secondary support. We break here, we're going back to low 40s. So be careful with this one. Jake, I don't like it. BLBD, is that Blackbud? Bluebird, that's right. Now we're talking, Jake. Obviously a long 1, 2, 3, 4, 5, but the fifth wave looks like a 1, 2. What that means is in Elliott wave terms is that every stock to go in 5 waves. Usually there's a 1, 2, 3, 4, 5. There's a 1, 2, 3, 4, 5. This looks like a 1, 2. So what we're looking for, Jake, is a move across this level. And right now, this is set up for a big move, meaning I think you can see maybe 15, 20 points on this stock into the high 70s. They, could very well do that. Now, I'm not saying it can't go further than that, but that's my immediate target. But what you want to also do is pay attention to where support might be. Draw your lines right there, and you can see the pullback today is right on a support level, which is 55 3/4, 56. It did bounce off of that slightly, but this one needs to get going, or it could break down. Secondary support, 53.5 and 52. And beneath 52, you break the trend channel, you break the moving average, and then you're in big trouble. I hope that helps. Michael wants to know about HYCM. Folks, please post your symbols. I'll be glad to assist you with you. Is that HYMC, Michael? I don't have an HYCM. I think you mean HYMC. Is that correct? Well, I'll assume it's that gold stock. This is one of our best trades of the year. Michael, we put a swing trade out at 5 3/4. I kid you not. When it broke out in September, right here. It was right there. And then watch it go up to about 9, pull back, and then rip into the 20s, eventually making it up to 58 3/4 for 1,000% in 4.5 months. I told all my people to sell up there only because of the percentage gain. We don't want to give that back. And it was overextended. The reversal bar is also an indication to me, and especially when it broke the next day's low at 45.5. It did drop back to 30, so a substantial pullback, but now it's recovered, and so is a lot of the gold stocks and ETFs. I'd be careful with this one. It's a great little gold stock, but I think it's way extended. Back in the beginning of 25, the stock traded at 2. And it went up to 60 nearly, and that was we're calling it 30-fold increase. So, excuse me, I'd be careful. Should it take out 59? You might see something in the mid-60s to low 70s, and that wouldn't be a shocker to me if it gets to squeeze. But be careful and stop under 39 100%. That's my opinion. Stop on 39. Okay, we're going to go with Jake's request on EVR. Evercore Partners in the capital markets. A little dicey, Jake. See this line? 284.5, 289, 298. So it is a slightly rising channel. I would look at this low here as a 100% stop on a 288. 100%. This stock could roll over and be 235.40 easy, in my opinion. Not that it's going to necessarily do that, but I'm telling you right now, if that's a topping pattern, that breaks this lateral price support. And it doesn't look pretty. It was down 678 today. Additional downside pressure under 300, 298 could collapse this one quickly down into the 60, 70 range or less. So Jake, unfortunately, I don't like that one either. Now for Pat B, ALB, coming off a big hit down to some key support. 155, 156, 156, 157. That 155.57 level, obviously lateral price support, it has been for a couple months. When I see a spike up and a spike down, you know what that is, right, folks? That's called an island reversal. It's very negative, very negative. A break from an island reversal that takes out moving averages and trend lines, which this did. Actually, it broke here, and this was a kiss back, followed by a reversal. From a technical standpoint, I wouldn't touch this with a 10-foot pole. Be really careful. Target 140, 142 is your next target. I hope you're short that one. Netflix, wonderful recovery of late. Really strong recovery. I mean, it was the dog of the Mag 7, no question. And it dropped from 134 in half to 75, just about in half, about 45 to 48%. Breakaway gap, always a good thing. It's at resistance, and look at this. Comes down and closes strong with another gain on a day where the market was down. Very strong indication that this stock wants to go higher. I'm not sure why or what, but I am a believer in trade what you see, not what you think. I could care less what the fundamentals are. That's just the way I look at things. My target is 104.5 and 112.13. Support has to be at the gap at 90, 90 and a half. I would put a stop under that because then you could fill the gap to 86 or even go lower. So Pat, that's for you. Barry, I'm assuming you mean Target Stores, Target Corp. Huge day today, and a big engulfing reversal bar. Look at from 110 to 122 and change. It closed 120.61. Fabulous day for this stock. It's the highest close on it since a year ago, 52-week high. I will also point out that on a long-term basis, going back 4 years, this is the long 1, 2, 3, and that's 4. So there's a possibility we get a big fifth wave down at some point, especially if the market tanks. Not that I'm necessarily going to say that. But, long-term Elliott wave analysis shows 1, 2, 3, if this is 4. If it fails here and rolls over, I could see 80. That's 40 points down from here. But with today's breakout, I'm now looking for a break of the declining tops line, which gets me up through, if there's a follow-through. We get over 125, we might start to see short covering and a run up to 136 to 150. So keep your eye on that. George wants to know about URNM and GDX. URNM is the Sprott Uranium Miners ETF. I think this group is about to fall out of favor. I hope I'm wrong. I do see a 1, 2, 3, 4, 5 fifth wave spike up reversal, and now this. Quite frankly, this looks to me like a big bear flag. And guess what it did today? That's correct. It broke the flag. And it did it with a pickup on volume. No matter where it closed, it's not a good day for this stock. I would say the whole group might be falling apart or getting some profit taking. And certainly, if you're in this, you want to stop on the 65, period. If it does manage to get up through the 73, 75 range, you might see a retest of the high. But now, be really, really careful with this. If there's anybody else that needs some symbols, please throw them out. Okay. And on gold, well, I have mixed feelings on this. I think gold today got whacked for the second time in a month. The GDX dropped 10 points, almost 9%. I think this was a head fake. Anytime you get a reversal off a major high near the channel top of the fifth wave, and you come down hard like this did, and then rally back up on lower volume, make a nominal new high and suck everybody in up to 116, 17, and hit a swan dive here. I would be forced to put a stop under 98.99. Excuse me. Just getting over a bad cold, folks. If anybody has a symbol, please put it up there. Pat B wants to know about DFTX. Interesting that you say that. This is a tech trader swing, I believe. I'm going to check my numbers, but I remember looking at this saying, boy, was this bullish or what? This doesn't get much better than that. And it's forming a flag in here. Let's just say, or a wedge, whatever you want to call this. It's a continuation pattern. And it doesn't look done yet, does it? Let's just say it's a wedge. I have resistance at 18.19. Once it gets through 19, I'm looking for 23, 26.7. I would put a hard stop under here. About 14.5. Don't forget where this came from. You always have to use this perspective about where stock has gone from. 470 to 1870. Basically, 300% since April. There's a lot of stocks that look like this, particularly in biotech. Can it go higher? I gave you the targets. I think it can. But for me, the entire trading pattern right in here depends on this low. Under 1560, I'd have a big problem with this stock. Especially if the company's with volume, because there's a 50-day moving average there, and the trend channel is just below that. This will break three things at once if it cracks there. So be careful and be vigilant. Keep that in mind. You're welcome. Anybody else with a symbol on anything? Let's see. We do have a few more. George Fee wants to know about silly because he's a silly guy. S-I-L-I? S-I-L-J, sorry. You're talking about the silver miners ETF. Yeah, I don't track this one, but of course you can see the trend. What's that expression? The trend is your friend, right? Well, this is what I'm seeing. A massive double top. Miners are in trouble. That's my take. If they don't quickly get back above the recent high, above 40.30 on SILJ, it could easily come down and retest 31 again. 31 is where these bottoms occurred, where there's a gap right across there. If I'm a technical analyst worth my salt, I instruct you to sell or stop under 30.5. Quite frankly, I wouldn't want the 50-day moving average to be violated because it hasn't violated it since November. So a move under, at this point, 33 would get me out of half my position. 30.5 gets me out of the rest. That's the way I like to trade it. Stop half at each position. at each support level. So let's move on. HNRG is a coal stock, and that's a beauty. Now, after a 1, 2, 3, 4, 5-way move, you spiked up and spiked down. That usually creates a top, and it did. And you can see that until and if it takes out 2190, 2180 with Viam, I would stay out of it. If you're long and you want to know what to do with it, you can stop under 16 and a half, 3/4, half there, the rest under 15. If it runs, it's got to break out above 2130. And then my target would be 24 3/4 and maybe 27, 28. Ultimately, if this continues to channel, you can see where it might be. High 30s, $40. Could be a double. Not bad. Barry wants to know about TMUS, TMUS, that's T-Mobile. Not a good chart, Barry. Here's why. Well, first of all, you broke a topping pattern. Left shoulder, head, right shoulder. See it? Yes, that's a head and shoulders top. Is the Vine pattern there? Not necessarily. But more likely when a flag forms and we break down and form another flag and break down and form a down channel. This reversal is a good one. Breakaway gap, retest, explode to the upside. And now we have a nice flag at resistance right there. But this has got to break out over 225. If it does, you might see something in the 240 and 260 range. But for now, be vigilant and keep your stop under 212. Under 210.12 or 211.12, you can come right back to 200, 202. But if it holds this platform and then breaks out, it may run. That looks pretty good. Right, Barry? Arif wants to know about Vail. Well, Vail is another one of those big miners. I think it's foreign, of course, and maybe Australian. Not sure. Here's what I'm seeing. Excuse me. This could be a left shoulder, a head, and a right shoulder. Today was really a bad day for the stock. It was down 105 or 6%, but the bond picked up as it broke. It hasn't broken support as it tested, I should say. Any downside from here? The 50-day moving average, my key moving average is 1535. It's at 1592. Not a lot of room there. If it breaks, this could be a 14, even $12.50 stock. But more importantly, it will have changed the trend. If this is a top. Right now, that's also a trend line, moving average, lateral price resistance. When you break all three at once, it's never a good sign. If this thing comes down to 14.5 and then bounces to 15.5 and does it on low volume, I'd short it. Yep, that's my take. UHS. I'm sorry, what am I doing? Okay. Another dangerous looking chart. Very dangerous. Why do I say that? Draw your lines. What's that look like? Well, first of all, big resistance up here. Multiple tops at 245. Even a year apart, year and a half apart. And more importantly, you can see that any move under 195 here, 196, 196.7. So under 195.6, Katie barred the door. This thing could get slam dunked into the high 170s. I would even further add to this that if it rallies up to 213, 218, 219, and does it on lower volume or some red bars, I'd short the shit out of the stock or sell it at the very least. Do I like it, Jake? No, I don't. Folks, please put up some new symbols so I can assist you if you have any questions. SPY, let's take a look at the SPY. Well, today was an interesting day for the market, wasn't it? Check this out. Nominal new low and nominal new multi-month low. Lowest level since November. Technically, it looks like it broke this line, doesn't it? The problem is it snapped back and closed above it. If it gets back below it and or takes out today's low at 669, I think we're headed down to 650, low 650s. And there's a big support zone there. Around 653. 650.53. This looks like a rounding top. For a while there, I was thinking the S&P is forming some sort of bull consolidation, and it still might be, but it better hold it right there. Maybe it's doing this. Maybe. Something like that. See it? Which is a big consolidation. We've seen so many times where they try to break them down here and here, held it. Now, on a long-term basis, this has gone from the April low of 493 all the way up to, was it 696, 697. So 200 points up, with virtually very little pullback except for this here. Today was not a good day for the market, although we had a nice rally in the afternoon. Tomorrow remains to be seen. It's an important day. Does anybody else have a symbol for me to check out? Anybody? If not, I'll go out and talk to you about some of my stocks from today. Also, some of my swing trades. I love this chart, but it's a little risky up here. Take a look at it. This IBRX exploded. It literally went up, 12 days in a row, and then went sideways in coil. When it broke out, it was a swing from 7 quickly to 12 and a quarter. And now it's setting up another wedge. Watch it one carefully, because over 11, I want you going long with it for a move to 14, 17, 20. That's a tech trader current swing with a tight stop. Should it rake under 880? ONDS, this is a crazy stock. I've never seen a stock trade 50 to 100 million shares a day, go up and go down, go up and go down. It's like, you get a headache looking at it. But it's a drone manufacturer growing rapidly. Not that I care about those fundamentals, but it's always nice to have good fundamentals. But something strange going on here, and I'm not sure why. Does anybody have a symbol for me? Or anyone need something new? Okay, we'll move on. I only have a couple minutes, folks, so if you have a symbol, you better throw it out now. Here's a new swing I put out recently. Elan, the animal health company. It broke out. It immediately pulled back. This is the problem with this market. Right now, we're in a dangerous mode. And I think that sometime at the end of this month, in the next 3 weeks, we could have an important market top. But will we go up first or just go sideways and then roll over? On Elan, stop on the 23.5. But target's 29 and 34. We have a couple more symbols here. KRP. Kimball Royal Partners, oil and gas. I do like the oil and gas group. My favorite two are this, APA and PTEN. Look at these two charts. Breaking out of bases, trending, Patterson Energy, and APA Corporation. We're making money on these two. You want to know about KRP. The only problem I have with this one, It's a beautiful trend, but it's up into a resistance zone. See it? You may have a problem here. It could get to here and back off or blow through it. Excuse me, get up to like 16 and a half, 17, and then pull back to test. So anytime you have a stock that's run this far, this quickly, from 11 to nearly 15 over the last 6 weeks, not a lot, but it's not a huge beta stock, I can tell. But there's resistance up here, so you got to be careful. Arif on this one, okay? VRN. VRN. I don't have a VRN. You sure that's the right symbol? While you're looking, Ron Beecham, I'll do George's QQQ for me. As you can see, the QQQ also rolling over, and this was not a good day for anything NASDAQ. Well, that's not true because on the Mag 7s, 3 were up, I think 4 were up and 3 were down. Not as bad as you might think. You can see there's a key support at today's low. I would say under 591. The QQQs could have a problem and maybe drop another 10 points to 581. Underneath that, it's Katie bar the door. It won't be pretty. MSTR. So Ron, did you figure out what VRN is? Okay, MSTR. Ugly. This looks just like Bitcoin, and I hate that chart. For me, there's no reason to own this stock at all. As a matter of fact, MSTX, MSTZ, I think it is, yeah, is going the opposite way. It's the bear ETF. I would say that on this one, you cannot buy a stock that's in a downtrend until it breaks at least one level of resistance with volume. So until this gets over 150, I wouldn't touch it with a 10-foot pole. Got that, Ronnie? So that's it for me. We're done. And this is HB signing off. I do want to let you know that you can come into my site for free for 2 weeks. David, I want to share that.
Okay. Yeah, you probably have to hit the share again. Or I can share it if you want me to.
I got it. Where is it? Okay, with it? Yeah. This is my site. You can see the trading room on the left, all kinds of people participating, talking about stocks, things that are breaking out, things of that nature. I usually share my screen, but I didn't. I took it off because I was going to be on the webinar tonight. So you can see on the right side here, you usually will see my screen share. Let me just do that for you real quick. And quickly sharing my screen that you're seeing right now in my room. And there it is right there. I will come on periodically and review these charts and give you my updates intraday as we day trade. For example, on EDSA, this thing was updated all day today. Look at that chart. Pop, pullback, and it's still going. Come join me for 2 weeks for free at thetechtrader.com. Sign up with no credit card necessary, and come join me for a couple of weeks and enjoy the ride. Hope you enjoyed my presentation today. Folks, this is HB. I'm out. I'll talk to you soon. Look forward to seeing some of you in my room. Bye now.
All right. Thanks, Harry.
You got
Great
it.
analysis to close out the day for us here on Analyze Your Trade number 223. So thank you for being here.
You're welcome.
So just a quick reminder for everyone. I did record each of the presentations individually. And those are, oh, someone says, thanks, Dave, love these. Yeah, these are always fun. Yeah, and mark your calendar. We're going to be doing this again on March 26th. So a little over 3 weeks from now. That'll be Thursday, March 26th. So again, mark your calendar. And you can just go to TimingResearch.com, and anytime we have a live event, there will be a link on the main page. I'm going to have a new calendar soon too, so watch for that. Been working on that. It'll be like a countdown timer and calendar for all future scheduled Timing Research events. So again, that'll be ready soon. Watch for that. Also, next week is one of our big annual events that Anka Metcalf and I always do. This will be our 8th one, I think. But it's our Women Teach Trading and Investing annual event. So all women trading educators giving their best education, their best presentations on what they teach related to trading and investing. So be sure to join us for that. We'll have about 20 presentations over 3 days. That'll be Tuesday, Wednesday, and Thursday of next week. So that's always a good event. And let's see what else. The crowd forecast news panel discussion that we do every Monday, that will be 5 o'clock next Monday, and Anka will be the moderator. So just a little change from normal there. And yeah, that's it for today. Again, bookmark this bookmark that. As soon as I can get the recordings processed and posted, they will be at that page, or search for Timing Research on YouTube, Substack, or your favorite podcast app, and you can get the recordings that way as well. Also, a new ebook from our friends at Big Trends. You can check that out. It's about trading NVIDIA options. TimingResearch.com/NVDA, and you can get instant access to that new ebook from Big Trends. So, all right, well, that's it for today. Again, be sure to join us next week for the Women Teach Trading and Investing event. And again, you can just go to Timing Research anytime we're live, and there will be a link to join the room instantly. If you have any questions or feedback, or anything you'd like to share with me, you can reply to any Timing Research email that comes to me directly, or you can go to TimingResearch.com, and there is a contact link at the top of the page. So, all right, that's it for today. Thanks, everyone.